Yes, we can begin.
Yeah. Good afternoon, ladies and gentlemen. I, Alok Churiwala, former Vice Chairman, BSE Brokers Forum, am truly delighted to be before you today to celebrate World Investor Week 2023 under the esteemed aegis of the BSE Brokers Forum. This event marks a significant moment in our financial calendar, highlighting the critical role that investors play in our global economy. Investors are the life and blood of financial markets. They are the individuals and institutions who provide the capital necessary for businesses to innovate, expand, and create jobs. They are the driving force behind economic growth and prosperity. And today, we come together to honor their contributions and strengthen our commitment to safeguarding their interest. World Investor Week is a global initiative recognized and celebrated in over 100 countries. It underscores the importance of investor education, protection, and empowerment. It serves as a reminder of the need for transparency, fairness, and integrity in our financial markets. It's a call to action for all stakeholders, regulators, exchanges, intermediaries, and investors themselves to work collaboratively for the betterment of our financial ecosystem. In conclusion, let's use World Investor Week 2023 as an opportunity to redouble our efforts in safeguarding the interests of investors and fostering a culture of financial literacy. By doing so, we not only protect our investors, but also strengthen the very foundation of our financial markets. Together, we can build a more transparent, inclusive, and resilient financial ecosystem that benefits everyone. Thank you, and let us embark on this journey to celebrate and empower investors around us. Today, we have a host of luminaires around with us. But let me begin by first introducing the chairman of BBF, Mr. Kishorji Kansagra, and a warm welcome to our guest of honor, Mr. GP Garg. But before I introduce Mr. Garg, let me first give a couple of words of introduction for Kishore Bhai, who's just recently been anointed the chairman of BSE Brokers Forum. An experienced executive director at Pragya Securities Limited, a leading financial services firm, Kishorji has a long history of working in the financial services industry. He is skilled in financial risk management, business process re-engineering, corporate finance, strategic planning, and organizational development. He has a strong business development professional background. He is a member of the ICAI of India. With these words, I hand over the floor to Kishorji.
Thank you, Alokji, for the introduction. Good afternoon, ladies and gentlemen. Honorable guest of honor, Mr. GP Garg, Executive Director, Securities and Exchange Board of India, and dignitaries from market infrastructure institutions. I am deeply honored to welcome you to the 4th edition of BBF Investor Show 2023, organized under the aegis of Securities and Exchange Board of India and International Financial Services Center Authority, the celebrations led by IOSCO, a momentous occasion that brings together investors, financial experts, and policymakers from around the world. This event underscores the importance of responsible and informed investing in today's global economy. BBF extends its sincere gratitude and thankfulness to our regulator SEBI, IFSCA for their continuous cooperation and support, to all the market infrastructure institutions who have supported this event on regular basis, to all the stalwart speakers from the industry for their valuable time, and to all the participants who are watching us live today. Investors play a pivotal role in shaping the financial landscape of our interconnected world. As we navigate the ever-evolving challenges and opportunities of the 21st century, it is crucial that we foster an environment of trust, transparency, and innovation in the financial markets. World Investor Week serves as a reminder of our shared commitment to advancing financial literacy, protecting investors' rights, and promoting sustainable investor practices. It is testament to our collective dedication to empowering individuals to make informed choices about their financial future. In today's rapidly changing world, where information flows freely and markets can be volatile, education and awareness are our strongest allies. We must equip investors with the knowledge and tools they need to make sound decisions, mitigate risk, and seize opportunities. As we look to the future, we must also recognize the importance of responsible investing. The global community faces pressing challenges such as climate change, social inequality, and economic uncertainty. Investors have a vital role to play in driving positive change through their investment choices. Sustainable and responsible investment practice can not only generate financial returns but also contribute to a more equitable and sustainable world. Particularly in the context of India, when we look at the level of financial literacy amongst the mass population at lower strata of the society, we may perhaps need to spread a very basic and one-line message amongst the potential new investors who are yet to enter the formal markets of the investment. And that one-line message can be like safety is much more important than the percentage of returns. And looking at the size of target audience, we may need to adopt a consistent and coordinated approach among the government, regulators, MIIs, and intermediaries. In conclusion, I want to emphasize that the success of World Investor Week depends on our collective effort. Let us use this platform to exchange ideas, share best practices, and inspire one another to promote a brighter financial future for all. Thank you for your dedication to the world of investing, and we look forward to the meaningful discussion and collaborations that will unfold during this virtual event. Together, we can shape a future where investment is a force for good, benefiting individuals and communities and the world at large. Thank you once again. Over to you, Alagji.
Thank you, Kishorji, for that very inspiring words to set the ball rolling for an exciting day ahead. Next up, we have our guest of honor, Shri GP Garg, who is the Executive Director of Securities and Exchange Board of India. It gives me great pleasure to introduce Garg Saab, as he is fondly known. Mr. Garg has handled several important assignments in SEBI since joining in 1994. So you can see he's virtually been, his tenure has underscored the entire progress that SEBI has done. He has been closely associated with SEBI and Government of India's initiatives on financial literacy and investor education in the country. He was instrumental in launching the SEBI complaint redressal system, SCORES, and Securities Market Trainers Smart Program for investor education, toll-free helpline, and financial education through resource persons. He played a crucial role in the establishment of NISM and setting up of its new campus at Patal Ganga. Mr. Garg, current portfolio include Office of Investor Assistance and Education, Enforcement Department, and General Services Department. Mr. Garg is SEBI nominee on the board of Investor Education and Protection Fund Authority, IEPFA, set by Ministry of Corporate Affairs, Government of India, and Technical Group on Financial Inclusion and Financial Literacy under FSDC. Mr. Garg holds a degree in Engineering, Law, and Management. Sir, with these short words of introduction, may I now invite you to give your opening remarks.
Good afternoon, and thank you so much, Mr. Alok Churiwala, for this wonderful introduction. And I'm happy that there is such a distinguished panel, and we have Mr. Kishore Kansagra, who made very nice remarks in the beginning. We have Dr. Dipesh Shah, Executive Director, Development from IFSCA. Mr. Nitesh Jaiswal, Head Business Development, NSC. And from India International Exchange, we also have Madam Hetal Kotak. Welcome to everyone, and I welcome you also on behalf of SEBI and everyone during this World Investor Week 2023. So, as we all know, we are doing it under the aegis of ISCO, and ISCO do a lot of things in the area of regulations and development of the market. But this is something very special, and this is one forum which gives us that what more we can do for investors. And this is the time when we also see that whether we are going in the right direction when it comes to the investor matters. So India with an economy and population size of 140 crore, I think the best part of our country is that we have, our median age of population is around 28 years. So it means we have a huge working population and we have a huge demographic dividend we should achieve. In a nutshell, we will have for quite some time many people who will be in our working population than those who would not be working. It means the people who work are far more than those who will retire or those who are not in the working area. It means there is a huge potential for development of our GDP. And we all know that we are now touching the, around $3.75 trillion economy. And our markets have also crossed more than, 3 lakh crore. It means GDP and, market capitalization is close to each other. But there are some of the things which I feel that we all have to see that our friend Mr. Kishore Kansagra mentioned, whether we are doing enough for securities market inclusion as well. Because if we see that around 9 crore unique investors, if we deduplicate the demat account, or around 12 crore mutual fund portfolio or investors taken together, if we compare it with the number of our citizens who file income tax returns, or if I say that those who have their Aadhaar and PAN card connected, they are more than 50 crores. So it means we have a huge potential to bring some of these people from changing their habit and making them savers to investors, because that is the best thing we can do for a common citizen. The day he understands the importance of investment, he would actually be the one who would be understanding why securities market is so important. So while we celebrate that as on 31st August, we have in mutual fund AUM of 46 lakhs crore. The long term, people feel that this market is safe. It gives you opportunity to make long term returns. That is something we should be able to convey to the masses in simple slogan or messages that I'll request to all of you. I'm happy yesterday we were in NSE and they were saying that they have coverage to almost 98% of our PIN codes across the country. It means our reach has gone. We have reached the nook and corners of the country, but the number of people who should be in the securities market, or who should have the demat account, or who should have the their own mutual fund portfolio, a lot needs to be done. So in order to make investing easy and reach crores of investors by harnessing the power of technology, SEBI has done many measures, and I'm grateful to everyone who is here, including BBF, to support our efforts, such as introduction of eKYC, ASBA, UPI as a mode of payment for IPO, e-voting, online nomination for trading account, demat account. We have recently, getting a lot of complaints. So we felt that this is one area, our all accounts, whether in demat or mutual fund portfolio, we should have nomination. This is something I'll request BBF to make it popularize among the investors. Now the running account settlement on periodical basis, OTP for off-market transfer, riskometer in mutual funds, and recently our online dispute resolution mechanism, by which not just in respect of brokers and DPs, the areas also investors can go for arbitration. Recently, SEBI also updated its website and has come with things like check your financial health. Our website has recently been launched with a lot of new features, and we have our Sarthi app. So I'll request BBF to spread knowledge about how over the period we have made ease of investing, how it is easy for an investor to open a invest through mutual funds or through opening a demat account. So some of these measures have made the life very, very comfortable, very, very easy. So I would inspire that each one of you at least tell other your investors that teach about this ease of doing investment or ease of doing, your own financial planning. Let each person teach other people, because that is the key. If we have to, as I mentioned, going from 10 or 12 crores to 50 crore, that is the message. And the best message goes when we tell one investor that you also tell about the importance of securities market, how it is easy, how it is, convenient to his family members and friends. But at the same time, it is also important that people should be aware of, about unsolicited investment offers or advices. So that is one area which is we are also grappling. You must also be grappling that investors should be careful about the unsolicited investment advice. And this is what is one of the themes of this year's World, Investor Week when we are celebrating. So some of the messages which I request that BBF and members through different channels can put through. For example, these investors should match the investment based on their investment goals. Investors should focus on long-term investment, because one of the recently, as you are aware, I would not say surprise, and investors should be aware that F&O, they must be very, very careful, because 9 out of 10 investors are making losses. So this is the message I think we should spread, so that, because Gandhiji said, your I encourage BBF to please send a message that if you don't understand F&O, if you don't understand how this entire thing works, better you see SEBI study and be careful. So investors should invest for long term, and they should invest based on their investment goals, and they should only deal through SEBI registered intermediaries. They should monitor their portfolio on periodic basis. And some of the basic things, if we can tell the investors, like power of compounding, what is the real rate of return? More than 95% in India, people don't understand what is the real rate of return. They feel that whatever money they get by way of interest or whatever comes to their passbook, that is the real return, which is not the case. So if we see that real rate of return, if you reduce by inflation, then is the real return. I think people will understand why security market is so important, and the importance of diversifications. And they should also be careful that what kind of asset they do in their portfolio. So as well as updation of their records of their mobile number, email IDs, because that is what is the road ahead. So investing should be a habit which we should inculcate among investors. And I'm very sure that BBF taking this initiative would also make sure that they send right kind of advice to the investors. And you have a very distinguished panel to send a message of this World Investor Week, which is basically for the investors, for the benefit of the investors. And this message should go in a simple way. They should make investing as a habit. All of you know that there is no shortcut for investment and your wealth creation. So I wish all office bearers of BBF a very happy, I would say, World Investor Week. And I'm very sure that when we meet next year, this investor population will only grow, and investor will be more happy, and the role of BBF in supporting investor issues would be much more. Thank you very much.
Thank you, sir.
On my part, on behalf of Kishorji, can assure you that BBF will stand shoulder to shoulder in all SEBI initiatives per investor education to ensure your goal of 50 crore investors as soon as possible, because that is also good for the business as it is good for the investors. And like there is a statutory warning on cigarette packets that says cigarette smoking is injurious to health, maybe we should now start educating investors saying F&O trading may be injurious to your wealth. So,
Excellent.
with these words, we invite our next speaker from IFSCA, that is the International Financial Services Center Authority, Mr. Dipesh Shah, who is the Executive Director. Dipesh Bhai and the BBF have had a long association. It gives me great pleasure in introducing Dipesh Bhai. Mr. Dipesh Shah has over 21 years of professional experience in international business, project development, corporate affairs, corporate law, and policy matters. His most prominent achievement includes setting up and operationalizing India's first smart city and international financial services center, IFSCity, at GIFT City, Gandhinagar, Gujarat. Before joining IFSCA in December 2020, his last 12 years tenure at GIFT City made substantial progress in getting recognition as India's model smart city. He brought in regulatory and business changes in the GIFT IFSC to bring in banks who are now transacting over $300 billion. International exchanges inaugurated by Honorable Prime Minister, now daily turnover of greater than $15 billion, and insurance and reinsurance companies for undertaking offshore transactions. He is Executive Director, Development at IFSCA. He's responsible for the overall development of IFSC. With these words, the floor is now handed to Dipesh Bhai.
Good afternoon to all the participants, and my sincere appreciation for the BSE Brokers Forum and the India Annex for allowing us to speak at this very important World Investor Week. And I'm really pleased to see Alok Churiwala after a long time. I think today when the BSE Brokers Forum large tower is standing in GIFT City, I think a lot of heavy lifting was done by him to make it happen. So I'm so glad to see him after so many years. And I clearly, whenever we see that tower, it reminds us of the initial committee of the BSE Brokers Forum who entirely heavy lifted the initial setup here. But I think what a time to speak at the World Investor Week, at the time when the maximum attention in terms of the investors is to look into the opportunities in India. Also at a time when the Indian residents are also looking at an opportunity to invest outside. And if we really combine both this opportunity, I think the GIFT really emerges as one of the important platforms for both inbound and outbound investment. And when it comes to the investors investing in the global market, I think the initiative of the Government of India of having its own International Financial Services Center is seen as a right step forward for the investors to utilize our own financial center versus using the other global financial centers to do India-centric investments, or even to utilize those platforms to invest outside. I think this is the most opportune time for the International Financial Services Center, which is fully functional in GIFT City in Gandhinagar. Also, we are seeing a lot of interest from both global and Indian institutions to set up international vehicles. If I can give you some numbers, we are close to now 550 plus firms in the International Financial Services Center zone alone, which have made IFFC as their home in terms of both investing outside India and investing into India, and also doing global business from the IFFC zone. So from a place where we were trying to figure out the structures which will enable the investors to come in and the institutions to come in, to a place now becoming more preferred destination for the global institutions to come in. We at the IFFC authority, being a unified regulator of the IFFC zone, we clearly see the role of the institutions being played in the IFFC is making a lot of businesses come into the IFFC zone and utilize this as a platform. I think when we are talking of the Investors Week, we should definitely talk of the two international exchanges which are operating in the IFFC today. The India Annex, which has to its credit, India's first international exchange in the IFFC zone, and the NSE IFFC, to its credit of bringing the GIFT Nifty on this platform. I think both these exchanges put together have enabled several new concepts and new listing in the IFFC zone, which obviously not only at the IFFC we are proud of, but also the Indian institutions in India, we are generally proud of that our own international exchanges are now able to provide platforms for both Indian corporates to list their masala and dollar bonds on the IFFC platform, and also the international institutions like say IFC, for example, have listed their bonds on the international exchange here in the IFFC zone, which speaks of the volume of these exchanges are able to now get the right institutions to come and invest. But I think the plans for the gift and plans of the government of India is much larger, as we saw in the recent announcement of allowing the direct listing of the Indian unlisted companies. I think this is a path-breaking announcement and an initiative of the government of India to allow an unlisted Indian company to directly list on the international exchange in GIFT. We do believe that a lot of Indian innovation startups will find a good testing ground for them to list their entities instead of going offshore in say Delaware, in Singapore, and other. They will now have a location to list their innovating entities, get the global valuation, and be able to trade on India onshore in the international exchange here. Some of the other steps being taken along with the equity listing is the steps to allow the multiple ecosystem players to come in. So now with the direct listing, the exchanges are operating here, brokers are operating, we have depositories, we have banks, we have all the market participants being approved and operating in the IFFC zone, which makes it much more easier for the investors to be able to use this as a platform. And to top of that, we have now the law firms, consultancy firms also authorized under the IFFC umbrella, which means that they know the regulations, they know the rules of the game, and they are better able to advise the investors to use the IFFC platform. I congratulate the organizers for spreading the awareness of the International Financial Services Center in the World Investor Week. And I'm personally very happy to be part of this gathering and being able to speak at the Investor Week. We look forward to more such engagements with the international investors and the Indian investors to understand the opportunities emerging from the IFFC. And I'm sure the day is not far away that you will see the first Indian company getting listed on the IFFC exchanges here. And we all will have one more gathering to celebrate the investment week when this first listing happens here. I'm sure BSE Brokers Forum, with their continuing support and that the way that they've started their operations, they will support the initial listing and provide all the necessary support to the investor community through these new vehicles emerging from the IFFC zone. Thank you very much for having me today here. And I look forward to more such engagements in the coming months with all of you. Thank you.
Thank you so much, Dipesh Bhai. Indeed, a pleasure to listen to you and to hear that Gift City is growing from strength to strength. From the humble seed sowed by you to the vibrant city that it is becoming. It is going to be a city of our dreams as far as financial services in India are concerned. We are indeed very excited to hear about direct listing of Indian unlisted companies. And rest assured, the BBF, like always, shall work with you very closely and assist you not only in promoting it, but also educating investors at large about your new initiatives. Next up, we have from NSE IFSC Limited, Mr. Nitesh Jaiswal, who is the head of business development. Nitesh Bhai holds a master's degree in business administration and finance and marketing from Kirloskar Institute of Advanced Management, and having more than 20 years of qualitative experience in space of business development, strategy, market operations for exchange, as well as Indian and global house spanning across commodities, equities, currency, and derivatives. His current role, he heads the business development of NSE International Exchange, NSE IX, across all products. He has played a vital role in all major initiatives, including NSE IX Receipts, which is one of the unique offerings for retail Indian investors, and contribute significant role in onboarding members and educating them. His previous assignment, he was head of business development in India, INX IFSC, a wholly owned subsidiary of BSE Limited. With these words, Mr. Nilesh, the floor is yours, and please educate the investors as how they can make the most of opportunities.
Thank you and good afternoon, everyone. So Alok ji, Kishore ji, Shri GP Garg ji, Dr. Dipesh Shah, my friends and colleague at the India INX, Hetal and Ritesh. Good afternoon, everyone. And I would like to congratulate the BBF for organizing this event. And this is the fourth one. So, I'll not talk about much because the speaker before me had covered everything, and they are expert in this field. So what I only like to say is that World Investor Week, it's not celebrated every year. I think we should celebrate every day, because the investor, without investor, exchange will not survive, right? So, for us, and both the exchanges are doing their best to educate the investors. And one thing I like to highlight here, I keep hearing this, the 9 out of 10 investors are actually losing money. So that is actually very saddening, in the F&O segment. So I think by next year, when we conduct this event, if the number goes at least 7 out of 10, that will be our, if you see the short term, in the 1 year, that would be the achievement. I think as a whole, if we can educate them, and this thing. So without, much, taking your time, I like to show a small video on the NSE IX. So as we know, we are the 100% subsidiary of NSE India, which is the largest derivative exchange in the world. So this small video we have prepared for the investors. Just allow me to share this.
NSE International Exchange, or NSE IX, is a fully owned subsidiary of NSE, India's largest exchange. It is committed to Prime Minister Narendra Modi's vision of Atmanirbhar Bharat by developing GIFT City IFSC Gujarat as India's gateway for global financial flow. Gateway that facilitates Indians to invest abroad, as well as open opportunities for foreign investors to participate in the India growth story, the fastest growing large economy in the world. NSE IX, the Universal Multi-Assets Exchange, is leading this initiative by nurturing new opportunities and channelizing capital flow to India and the world through global partnerships, innovative product offerings, and state-of-the-art technology to achieve GIFT City's ambition as a global IFSC. Products offered by NSE IX include GIFT Nifty, SGX Connect Partnership,
GIFT City में NSE, IFSC, SGX Connect की लॉन्चिंग के जरिए आज ये शुरुआत हो रही है.
INR USD derivatives, debt securities market, NSE IFSC receipts offer trading in global stocks to help diversify investments in global economies and top performing companies. Depository receipts. NSE IX is expanding its portfolio with additional products as well as sustainable instruments in future. GIFT Nifty offers a single window of liquidity and access to USD-dominated Nifty derivatives on NSE IX under the regulatory framework of IFSCA. NSE IX has received Part 30 exemption from CFTC under Regulation 30.10. This enables US customers to participate in derivative contracts listed on NSE IX. The decades-old partnership between SGX and NSE IX strengthened its bonds with the commencement of onshore operations on 3rd July with a new identity. The onshoring of these offshore services of NSE IX SGX Connect is a landmark step that further eases access for foreign investors to Indian capital markets. NSE IX SGX Connect brings home an average daily turnover of over 3.5 billion US dollars and an average month-end open interest of 7.5 billion US dollars. NSE IX SGX Connect contracts will be accessible for almost 21 hours every day. This overlaps with Asian, European, and US trading hours. It will also gradually roll out other indexes under GIFT Nifty Suite. NSE IX offers hosting services, including low latency, co-location, and state-of-the-art data center. Our co-location facilities boast of cutting-edge technology, state-of-the-art facilities to ensure uninterrupted power supply, and maintain optimal temperature at all times. NSE IX deploys robust state-of-the-art technology developed by NSE, the world's largest derivative exchange, and offers high levels of scalability, resilience, and redundancy. The horizontal scalable architecture handles over 200 million trades and over 14 billion messages every day.
NSE IX is a truly universal exchange offering all underlying asset classes and its derivatives. At NSE International Exchange, our vision is to become the global gateway connecting India to the world by offering foreign investors unprecedented access to participate in India's growth story and home investors to access investment opportunities in global assets. Ease of access, tax incentives, longer trading hours, regulatory framework in line with global jurisdiction, our state-of-the-art technology, and robust trading infrastructure ensure seamless access to multiple assets investment products in a cost-efficient way. We are committed to building a vibrant primary market ecosystem and active and robust secondary market for capital market products at GIFT IFSC.
So with this, I'll close my session. Thank you.
Thank you, Nitesh ji, for this extremely a 360-degree view of NSE IX through an audio-visual presentation and the message from the CEO. One message that we take home is we will and we shall celebrate World Investor Week, not just as a week once a year, but daily, because the investor is the cause celebrate and the reason, the ethra for our existence in the capital markets. Thank you so much. And up next, we have Mrs. Hetal Kotak, who is the DGM listing in India INX. Mrs. Kotak is a chartered accountant with over 19 years experience in capital markets. She is presently working as additional general manager listing at India International Exchange, the first and leading exchange in GIFT IFSC. Her responsibilities include identifying market opportunities and ensuring maximum flow of potential clients on board and listing their financial instruments on the exchange platform. Over and above the core area, work area of fixed income, she is also responsible for new product development at the exchange and works very closely with the regulators and market intermediaries to fulfill the vision of IFSCA in making GIFT City the hub for sustainable finance. She has previously worked with BSE Limited in charge of primary markets and secondary market operation functions. With this, I hand over the floor to Mrs. Kotak.
Thank you. Thank you so much, Alokji, for the very kind introduction. There's actually an advantage and a disadvantage of being the last speaker because I don't know what to say now. My colleagues have said everything that has to be said to all the participants here. But however, I begin with saying that a special mention and thank you to all our dignitaries and guests from the regulatory side here, under the august presence of whom we are here celebrating the 4th World Investor Week. And a big thank you to BSE Brokers Forum, because as we approached them with the idea of propagating GIFT IFSC and educating the investor, making it the core theme this year, they were very enthusiastic. And for that, Kishorji, Alokji, Vispi, we are very thankful to BSE Brokers Forum. And thank you so much. We really hope that throughout this entire session, we are able to help our investors. So much has been said about investors, and I would like to say that today they have a plethora of options available, and them being on Indian soil do not know that an offshore unit called GIFT IFSC is available for them with so many products, so many, our two exchanges with a wide array of products being presented on the platter. We boast of 22 hours of trading. We start when the Japan market starts and we shut when the US markets shut. So, I mean, what is it that we do not offer to the investor? So whether it is an Indian investor or whether it is a global investor, our exchanges here in GIFT IFSC have a lot of products to offer. Throughout the length of this webinar, my colleagues from INX as well as NSE have come up with such a beautiful plan to educate the investor, whether he is a foreign guy or an Indian guy, as to how this opportunity of GIFT can be leveraged. And having said that, I think it has already kindly been said that Honorable Prime Minister has inaugurated our exchange. And his vision and his idea at the time of inauguration also was to onshore offshore services. So we rather say that GIFT IFSC is a way where you can make in India services, not only make in India products. And so this is a way of us all contributing to Atmanirbhar Bharat. I would not stay two steps behind from my colleague Nitesh. So I would like to introduce my exchange to all the participants here. And I would play a very small AV and post that the webinar can begin. If you can allow me, please.
Hitalji, volume. It's not audible.
At Gift City, Gandhinagar, India INX, inaugurated on January 9, 2017 by Honorable Prime Minister Shri Narendra Modi, bears testimony to this. It has become the proverbial gateway for Indian investors to go global. The world is now their playground as they leverage new growth opportunities with India INX, the best offshore platform to list and trade securities. India INX is a global ecosystem for market participants to raise funds and trade in equity, commodities, currencies and index derivatives. India INX has partnered with several organizations to offer state-of-the-art technology and services to facilitate bigger plans of an investor. India ICC has been recognized as a qualified central counterparty and a third-party central counterparty by the International Financial Services Centres Authority (IFSCA) and European Securities and Market Authority (ESMA) respectively. It offers convenient and hassle-free settlement of funds through several reputed clearing banks. The platform also offers attractive tax benefits which are at par with global IFSCs. India INX is committed to the environment and provides India's first Environmental, Social and Governance or ESG platform for green bonds, GSM Green, which was launched in 2019. The settlement of securities is done through international central security depositories to help in smooth. With a wide range of innovative products and services, India INX is the offshore exchange of choice. For INX is indeed the perfect gateway to take advantage of investment opportunities across the globe.
Thank you very much. And with that, I once again thank the regulators and BBF for this opportunity. And we do hope that the participants have a tremendously knowledge gaining session from all the speakers to come hereafter. Thank you.
Thank you, Mrs. Kotak. And the one takeaway that stands out is, of course, the fact that BSE was the leader in starting the operations. But we start with Japan and we shut our markets when the US markets shut. I think that is one big takeaway that the investors are going to take home. And with this, we conclude our first session of this very exciting day that we have planned for you. And the next session, we are going to discuss investment opportunities for non-resident Indians and foreign nationals in the Indian markets through GIFT City, the Indian outlook. For this, we have a plethora of speakers, but the first in line is Mr. Mihir Upadhyay, who is the General Manager of IFSCA, International Financial Services Center Authority. Mr. Mihir has over 20 years of experience in private equity, venture capital, regulatory organizations, and consulting firm. Before joining IFSCA, he was Chief Investment Officer at NB Ventures, a VC firm based in UAE. Mr. Mihir Upadhyay worked with the Pension Fund Regulatory and Development Authority of India, PFRDA, Brand Capital, ICRA Management Services, and JP Morgan. He has an MBA from Wellington Institute of Management, Development and Research, and BCom from University of Bombay. With this, may I now invite Mr. Mihir Upadhyay.
Thank you, Alokji, for this warm welcome. And really like to thank VC Brokers Forum for organizing this event. Thank you. Hello.
Yes, please. Please go ahead. You're audible. Yes, sir. Thank you.
So are we going in with the round, or we are just going with one individual speaker? Sorry for this, but
no. You can say a bit. The allotted time is 10 to 12 minutes.
Sure.
So yes.
So thank you.
Certainly.
So I'll just like to touch upon certain things and the kind of the activities which are being done and what really transpires for the investors, at least looking to invest through GIFT IFSC into India, or for domestic investors looking to land in GIFT IFSC and invest outside India. So opportunities for both domestic as well as foreign investors, especially the NRIs. So to begin with the general theme, in past 3.5 years, a lot of work has been done. Moving away, IFSCA coming out with their own set of regulations, which are there, known as IFSCA Fund Management Regulations, which has been benchmarked with the global standards, which we have seen in other jurisdictions. And the good amount of work, and also it has been accepted by the industry. And to give you certain figures, today we have 73 FMEs, the fund management entities, which are set up in GIFT IFSC. They are managing or they have registered 69 funds with us, and the AUM commitment which these funds are going to garner money from the investor is to the tune of $18 billion. So in a 3-year journey with regulations coming out in only April 2022, we have seen this good amount of traction. We are seeing good amount of applications coming in. The best part is the investors are getting a platform where they can invest money to India as a gateway. So onshoring of offshore is happening in a true sense. We are seeing good amount of funds which are based in other jurisdictions like Singapore and Mauritius migrating their operations to GIFT IFSC. Couple of already announcement to this effect has happened. We see many more to see in next couple of months to grow. So we truly believe that IFSCA is coming out as a viable option for the fund managers as well as for the investors to invest in India. And also with the launch of the outbound funds, it is also happening for the funds which are, looking to invest in the global markets. So PMS activities to a certain extent has already started. And now we are looking at the larger AMCs also setting up their shops over here. So that is where at this point of time, maybe the target audience has been the ultra HNIs, the corporates, or even the institutional investors. But we have been in constant dialogues with the large AMCs to set up their shops here, and again channelizing money from the global side of it into India, into the mutual fund side of it, or maybe into the direct side of it through a mutual fund route in GIFT IFSC, and vice versa, whereby an offshore fund collecting retail money from India and investing outside. So that is a trend which we are seeing. People are gearing to it. There are certain clarity on the taxation and those things which they are looking into it. But I'm sure the way it has progressed, it gives a lot of opportunities for the fund managers to have their offices in GIFT IFSC and to mobilize money or capital which is required for the growth of India. And the last, also I'd like to touch upon one particular, enabler which has been done in the fund management regulation, which is the setup of a fund labs. Here we want to see if the new fund managers, they come out with their trading strategies or strategies which they have not implemented in, or they plan to implement, but they are not sure whether to take third-party money and then see. So they can come out with their own set of money and they can come into our fund labs, which is sandbox kind of a thing, and they can experiment with their strategy. This we feel will give boost to new fund managers to try out certain things in a regulated manner. And if everything goes fine, they can migrate to the overall fund regime. There are other enablers which are there, like the PMS or the REITs, Invest and all, but I'm not getting into the specific one. But these are the few things which I feel are largely driving the ecosystem over here. The entire ecosystem which is required for a thriving fund management industry is already present in GIFT IFSC. So I'll just, and the way things are moving, we are taking care of the things which our disclosure regimes are there, which gives information to the investor up to the last bit in terms of clarity as to what kind of funds they are subscribing to, and those things are there. So in a way, we feel it's a good platform for people to come and invest in India through IFSC and also invest outside India. Thank you.
Thank you so much, Mr. Mihir. In fact, clarity on taxation is something that would be very essential for the investors. Although you did mention that there are a plethora of products to spoil the investors, REITs, InvITs, PMS, I'm sure investors will all flock towards it. But like I said, the much needed clarity in taxation is something that we need to look forward to, and we'll be hoping that comes in as soon as possible. And
so, just one point, most of the clarity on the tax front is already there. So we don't see there's a bit of a challenge on the taxation front.
Okay. I'm sorry. So with the clarity in taxation already being there, I think now there should be no problem for the investors to flock to the
right. So it's a fund manager has to come out with more products. That is where I would put the emphasis on.
Absolutely. Point taken, sir. Thank you so much for your presentation. And up next, we have Sarath Satkumara, who is the Chief Investment Officer International of Aditya Birla Sun Life AMC. Sarath is the Chief Investment Officer of Aditya Birla Sun Life AMC's international business. He's been a pioneer in India, South Asia, managing money since 1993. He has over 30 years experience in asset management and as an analyst, portfolio manager, managing director, and CIO, largely focusing on India. His previous associations, there's a long list, which I will not get into at this point in time, but a warm welcome to Sarath. The floor is all now yours, Sarath.
Good afternoon. Can you hear me?
Absolutely, loud and clear.
Right. Thank you for inviting me about three things. India's outlook, why we selected GIFT as to launch our fund, and we are getting ready to launch ESG fund, the first out of GIFT City. And and I was asked to talk about it. And let me start with India's outlook. I think this is something that you have been hearing for a long time: the GDP growth, the per capita incomes, the infrastructure. What I'm going to tell you is something that you rarely hear. I want to give you a historical perspective on Indian markets, because I have been investing in India for 30 years, and that since the Indian market opened up for foreign investment in 1993. So I suppose learning about where you came from will get you a better understanding about where you're going. And 1993, Indian market opened up for foreign investment, but India didn't do it willingly. 1991, India was a bankrupt country. Its foreign reserves were down to $1 billion. Compare that with 600 billion today. And IMF came and bailed out India and said, open up your markets, cut your duties, and get it integrated to the world economy. So that's how India opened up. The good news is there was a great finance minister at that time, Dr. Manmohan Singh. He knew what to do. And India went to work. And when I moved to Singapore in 1992 from New York, I had 6 months to prepare for India's opening. Fortunately for me, I was going to run the India business of one of the largest investors, Capital Group. We had 160 billion under management and 20 billion in emerging markets alone. That was a lot of money at that time. We were 50% market share in emerging markets. Compare that with India's market cap in 1993 January, that was 55 billion. And as you know, today is 3.7 billion. And India was a different place when I made my first business trip in 92 and then 93 and so on. And India was changing from a command economy to a market economy. A lot of companies were struggling. I think that struggle took maybe 10 years to really get adjusted to market economy. And most companies were diversified. They had 5-6 businesses. What they were trying to do is to manage the political risk, economic risk, regulatory risk internally. So I couldn't find any focused businesses at that time. And maybe Reliance was one of the few large businesses. Then there was a lot of opposition to market opening up, economy opening up. People like Rahul Bajaj formed a Bombay club. The whole purpose was objecting to opening up India because they had it so good. And I remember my first meeting with Rahul Bajaj, I got kicked out of the office. And so first 10 years in India after opening up was very difficult. I think I went through 5 prime ministers. Compare that with India had only 14 prime ministers since the independence in 1947. And when I came to India, there was no research on companies. And India's market cap was 55 billion. And India was 2 to 3% of the MSCI index. And today is 16%. And so it really struggled for a while and got its act together, I think, last 15 years. And Prime Minister Modi had a lot to do with it. And actually, Prime Minister Modi reminds me of Ronald Reagan in India. I was a student during Ronald Reagan's presidency, and Prime Minister Modi focuses on big things like Ronald Reagan, and he focuses on things like less regulation, less taxes, focus on technology, and more than anything else, get government over the back of people. And all these things are working. And when I talk about India's future, I think we are in a really good situation. And I want to focus on 1 or 2 things. One is China and India, how well positioned we are versus India, versus China. And as you know, China is a command economy. Policies can change overnight. There's no transparency. Legal account system is questionable. India has all those advantages. And then on top of that, manufacturing is shifting from China to India now. China plus one policy. And when you look at India from a foreign investor's perspective, the indexes are very important. And 2010, India was 8% of the global emerging markets, MSCI Global Emerging Markets Index. China was 13. 2020, India was still 8% and China was 35. If you look at it today, India is 16, it has doubled over the years, and China has reduced to 27%. I think this thing is going to continue, and India's weightage in the index continue to increase, and China will continue to decrease. And this is where you attract foreign portfolio flows. More than anything else, what's important to a country is foreign direct investment, FDI. And India is still far behind China in FDI. 1090 to 2010 years, India used to attract about 2 to 5 billion. 2000 to 2010, India used to attract about 10 to 30 billion. And 2010 to 20, India is to attract about 50 billion. Now it's running around 50 billion plus. And all this time, China was attracting 100 billion to 300 billion. And so India is far behind, but things are changing with the manufacturing sector coming into work. India's global share of FDI is still only 4%, and it used to be just 0.3% in 93. And similar with trade and services, India's participation, global participation is still very, very low and lot of room to grow there. And one of the questions as a India investor I get from foreign investors is foreign exchange. And Indian rupee is going down, and especially the Middle Eastern investors. But if you really look at it, last 30 years, Indian rupee is down 5% per annum. And last 10, 20 years, it's even less. So if you can generate 15 to 20% dollar returns in India, and I'm willing to give 5% on the currency. So I don't think it's a big deal. And coming back to, I will take any other questions on the outlook if you have any. And I want to talk a little bit about our fund, which we are going to launch in a couple of weeks, 2 to 3 weeks. This is going to be the first ESG fund that's going to be launched out of Gift City. And this fund will invest in 20 to 25 mid-small cap companies, all growth companies. And these are going to be the first of its kind, because not only will we invest in these names, but we will engage management to make them better businesses by improving their investor relations, strategy, financials, more than anything else, their ESG rating. By doing that, we are hoping that these companies will get a PE re-rating and increase their earnings. And 70% of our portfolio will be in environmental or sustainable stocks, covering industries like air, water technologies, electric vehicles, recycling, waste management. The other 30% will be in social impact stocks like microfinance, affordable housing finance. So this will be a unique fund exposed to growth, mid-small cap companies, and on top of that, we'll be engaging with the management. You might ask, why this fund now? Let me give you a couple of reasons. And if you look at India, India is very polluted. We all know that. 16 of the top 20 most polluted cities are in India. Somebody has to come and clean this up. And I think our companies are going to do that. And the other thing is water. We talk about monsoons, there's a shortage of water in India. India has 18% of the world's population, but only 4% of the world's water resources. So water is going to be a very important component going forward. And some of our investing companies are going to help that. And today, renewable energy accounts for only 22% of the energy grid in India, but it's going to go to about 45% just in 10 years. So it's going to create huge opportunities in spaces like renewable energy, solar, you name it, wind, and electric vehicles. And when it comes to social impact stocks, still 55% of Indian population lives in the villages. And some of the companies we'll be investing in will be enhancing their lives and helping them to upgrade their lives. So in summation, our portfolio would be very high growth, specific industries that India needs over the next 10 to 20 years. It will have a low PE. It will fill a great need. And if you have a little time, I'll be happy to spend 2 minutes and talk about GIFT, why we selected it, why international finance, what requires in the international financial center. Stable country and environment, friendly regulators, friendly tax environment. There should be enough business volume. I think India will have enough business volume and the regional countries and capable people. And India has many capable technical people available to make this IFC a success. Actually, we are exporting these people to places like Singapore and Hong Kong and Europe and US. And India, major financial centers like London, New York, Hong Kong, now Dubai, they have taken years to develop, but I think IFC, GIFT City is going to leapfrog all of them. And I work with the IFC staff. They are very friendly and very proactive. And getting the first ESG fund out of GIFT City approved was a pleasure. And we used to go back and forth and get things done. And so a lot of the technical things about the GIFT City, you can get it, and I'll be happy to talk about it. But I would rather take some questions if anybody has any questions.
Yeah, we have a question for you. It comes from one of our listeners. What is the benefit for a non-resident Indian if he invests through GIFT City Fund as compared to investing directly in India?
You don't have to open a bank account in India. You can do it directly, and your tax and you are not going to be taxed at the source. Your regulatory and tax environment is going to be superior, or at least as comparative as Mauritius or Singapore or Dubai, for that matter. And you have a dedicated regulator. You don't have to go to many places running around. And you don't have to go to RBI. You don't have to go to SEBI. They are all combined together. So it's a whole heap of benefits. So those are some of the major ones.
Yeah. So with these benefits, I think all roads lead to GIFT City, and the investment highway should be open. With this, we thank you so much, Mr. Sarath Satakumara, for your insights into what Indian capital markets were in 1993 and cut to 30 years later, 2023, from 1 billion to 600 billion of reserves, of 55 billion market cap to 3.5 trillion of market cap, and MSCI weightage of 2% to 16%. I think this is only set to grow. The Indian investor has got itself the best deal, and the resilient Indian investor shall forever smile. Thank you so much for your presentation.
Thank you.
Up next, we have from NSE IFSC Limited, Mr. Nitesh Jaiswal, who's the head business development once again. Over to you, Mr. Nitesh.
Yeah, hi, Alok ji. Good afternoon once again.
Good afternoon.
So So I'll stick to the topic, what we have set for today. So before that, like to for the viewers, I like to explain what are the main USP of this exchange. So we are, as you know, we are the 100% subsidiary of the NSE India, and we operates for almost 21 hours. So we start our day from 6:15 a.m. till next day 2:45, and we are we call it the India's global exchange. So we have a single platform for all the products, maybe equity, currency, commodities, everything. Product wise, we have, as you know, the GIFT Nifty recently migrated here. So the SGX Nifty has become the GIFT Nifty. So that is there. We have all the 4 indices listed here: Bank Nifty, Fin Nifty, Nifty IT, and the Fin Nifty. So all these 4 Nifties are here, and also the options are there. Apart from that, we have 150 plus single stock futures listed on our exchange. We have various cross-currency product, including the INR USD, and also we have the debt listing platform where close to 46 billion dollar bonds have been listed by various the PSU as well as private. And in this exchange, you don't have the the STT, CTT, GST, stamp duty. Nothing is applicable here, and there is no capital gain tax as well. We offer a single platform where we offer the full fungibility. We don't have segment wise system that the way we have on the onshore exchanges. So we have a single platform for all the products which get traded here. And all the products are available for the international investors. So all the NRIs can trade, the foreign FPI, they can participate. And we have a very unique concept here called eligible foreign investor. As you know, for trading Indian market, you have to register yourself as the FPI. The foreigner has to register themselves with the SEBI as an FPI. In GIFT City, in GIFT-based exchanges, if you want to trade, you don't need to register yourself as an FPI. You can come as an EFI. It's the same way the normal you get a client onboarded by the members. The same way the EFI will get onboarded by the members here. So we call it EFI. They can participate. And for the retail individual investor, we have something very unique product called the US stock, the NSE IFSC receipt. So that is for the retail investor. So else all the products are available for the foreign participants. So happy to take any question if you have.
Yes, sir. So the Indian investor, according to you, is spoiled for choice because, like you said, city never sleeps, exchange never sleeps. 21 hours of operation, 6:15 a.m. to 2:45. So I think that's a very great thing, and no STT, no CTT, no GST, no stamp duty. I think that itself should be music to the ears of investors. But what are the 2 or 3 things that you think that are still missing and which the investors would like?
So the
list of demands is long, but what are the top 2 or 3 priority areas, according to you, that are still lacking?
So I'll say, the regulator here, just for the, for the larger audience purpose, we have a IFSC regulating here. We don't have a SEBI. So this IFSC is a unified regulator where all the, the RBI, SEBI, IDA, PFRD, all the powers of the different regulators has vested in the regulatory body called IFSC. It has been created by the Act of Parliament in 2020, and so they are basically regulating the exchanges. And I must say that they are very dynamic regulator because everything you will get under one. It's a one-stop shop for all your needs. So maybe for banking, for fintech, for everything. And the one thing which was missing, that was the equity share listed on this exchange. And very soon, it will be a reality now. So Indian companies who are either listed or even they are not listed on the on India on the Indian exchanges, they can come here. So that was one of the need here. So that is going to fulfill very soon here.
Fantastic. I think the investors have a lot to look forward to. Thank you so much, Nitesh ji, for your lovely presentation and taking our questions. And That brings us to our next speaker, Mr. Ritesh Kumar, who is the Head Business Development, India International Exchange, India INX. Ritesh is having a master's degree in finance with over 16 years of experience in capital markets. He's presently working as Assistant General Manager, Business Development, India International Exchange, the first and leading exchange in GIFT IFSC. His responsibilities include business development, marketing, and promotion. Over and above the core work area of business development, he is also responsible for new product development at the exchange and works very closely with the regulators and market intermediaries to fulfill the vision of IFSCA in making GIFT City the financial hub. He is working with BSE Limited since 2008. The floor is all yours, sir.
Thank you, sir. So, good afternoon, everyone. First of all, I welcome you all on behalf of BSE and India International Exchange. The exchange was established by BSE in 2017 and inaugurated by our Honorable PM, Shri Narendra Modi ji. This is the first exchange inaugurated by PM, and this is the first exchange commenced operation to start trading, to list and trade debt product, to launch dedicated green bonds, to provide trading window of 22 hours, and live trading from real sites. So these are the benefits that covered my colleague also. There is no CTT, STT, stamp duty, and exchange TRC. For GIFT City entities, there is a 10-year tax holiday on income tax also. So I would like to discuss the key benefits or key value proposition of India INX. First of all, is a balanced portfolio. We are offering gold future. We are offering in commodity. We are offering, and we are having a good liquidity in gold future contract. We have good liquidity in index future, index options, and currency derivatives, USD INR and USD contracts. So non-stop trading access from 4:30 a.m. to 2:30 a.m. In the night, and total turnover till date is around $8.89 trillion on exchange, and highest daily turnover we have seen in a single day is around $30 billion on exchange. So exchange is offering competitive cost, easy to onboard diverse participants, like as mentioned by Nitesh Aswalji, like a non-resident can simply do KYC with any broker and come as a EFI. They doesn't need to open bank account and all. And so one more benefit with the India International Exchange is the exchange transaction charges are zero as of now. So as you know, like other cost, regulatory costs like CTT, STT, stamp duty is not there, and exchange is not also charging anything. So cost of trade on India INX is practically zero. So as you can see, we have index future, India 50 index future, and good liquidity in options of India 50 index future. As you can see, order book, the screenshot of order book on the screen. We have a gold future contract and good liquidity in gold future contract since 2018. We launched this contract in 2018. So last year, Reserve Bank of India, RBI, came up with a circular on 12 December 2022 and allowed the Indian entities to hedge gold exposure risk on GIFT City exchanges. So as of now, India International Exchange is the only exchange having gold future contract. Lot size is 32 trions, approximately 1 kg, if we compare with in kilograms. So contract details are, or contract specifications are given on a screen. Rates are very much aligned with the international exchanges. If you will compare the current rate with the rates on other international exchanges like CME, GCX and all. So these are some issuers who have raised bonds on debt on India INX. So this is a total volume. We have one more subsidiary in GIFT City. This is India INX Global Access. India INX Global Access is a 100% subsidiary of India International Exchange and providing access of international markets to GIFT City entities to all category of clients. So basically, product will be enabled both based on the jurisdiction of the client If a resident Indian will open account, then whatever allowed by RBI under LRS will be enabled. As of now, resident Indian clients can buy foreign shares. They cannot trade, they cannot leverage, they cannot take leverage, and they cannot do derivatives. Indian entities like the corporates in India can hedge their exposure, commodity exposure risk on international exchanges. So few entities already hedging risk on international exchanges through INXGA in cotton and in palm crude oil and all. And if NRI or non-resident Indian will open account within INXGA, then we will enable product as permitted in their respective jurisdiction. And GIFT City members can also access global markets. They can trade. They are already trading. Like many members are already have set up the prop trading desk for trading on international exchanges. They are already trading on various global exchanges like CME, LME, ICE, Eurex. Even they are trading on small exchanges like Thailand for doing arbitrage with CME gold and Thailand gold and etc. So INX Global Access tied up with multiple international broker as an introducing broker. That includes Interactive, Algebra, and Marix, TradeX Station, KGI, and others. So thank you very much. We have set up a help desk also for anyone who have any query related to any product of India Annex or even related to gift. So this you can write to us at bdm@indiaannex.com, or you can call us on our support desk 07961993200 from 10 a.m. to 8 p.m. in the night. So thank you, sir. That was a small presentation. I hope.
Thank you so much, sir, for your very enlightening presentation on what the investor can do and actually benefit from trading in international markets. I think some of the key pointers that you have given for local retail investors is how they can leverage on the use of their LRS and open seamlessly open a KYC directly with the broker. There are zero transaction charges as of now. So that will help them, and they can access 150 international markets using their LRS to trade. If futures and options are not allowed currently, is that right?
Yes. So resident Indians cannot trade in future and options, but GIFT City entities, any Indian corporate can set up an entity in GIFT. They can take exchange membership, and they can set up a prop trading desk or trading on international exchanges.
Yeah, perfect. So with this, we have come to an end to the session. We still have some time before we begin our next session. So we request our viewers to stand by till we let in our new speaker. Thank you so much. Thank you so much.
Yeah, thanks.
Thanks. If Kishorji is available, can we have Kishorji? So maybe we can have a chat with Kishorji till we begin our next session.
Alamji, I'm on call. Will take few minutes.
Yes, Kishorji?
Yeah, I'm on call. I'll take few minutes.
Fantastic. So Kishorji, can you just briefly outline what is it that we should be doing for investors as BBF?
Now see, as we grow further as a country, we will have large number of incremental investors getting added in the investor will be generating investable surplus, those incremental mass of investor will be coming into the market. So we'll have to do some dedicated efforts in educating investors. See, still we have very low level of literacy, particularly financial literacy amongst the lower strata of the society. So we need some dedicated efforts to educate the people, to make aware about the possible mischief or possible fraud or possible mis-selling of the product in financial market. And we must do some sort of a easy entry and ease of doing business, like opening of accounts, some hand holding to the clients, because large number of clients and new investors are still not familiar with the technology. So very few people would be able to do the account opening process on their own on online platform. So we'll need some intermediaries, a large pool of intermediaries and their assistants, like authorized persons or some other type of intermediary who can reach out to those potential investors who would be coming to the market during the next decade or so. So we all, as a government, regulators, intermediaries, MIIs, we all have to step up our efforts in education of investors.
Sir, I believe BSE Brokers Forum has been premier and very proactive in the area of reaching out to investors all over the country. Would you like to mention a little about that?
Yeah,
the investor seminars that we keep having.
Yeah, we have a very well qualified people who are dedicated for this cause only. Like we have Dr. Aditya Srinivasan, who is carrying out very extensive investor education seminars and reaching out to all the colleges, schools, and other institutions where they want to impart some financial literacy and education about the financial market. So we are doing quite a extensive activity in this cause of the investor education.
Fantastic. It's great to hear that. And one final question to you, sir, before we let you go. I believe BBF is hosting the Asian Securities Forum this year. Can you enlighten the investors more about it?
Yeah, we were quite fortunate enough to be selected as a host for this year's ASF meeting. And almost maybe some 15-16 countries will be participating. The association and other institutions of those countries will be participating in this meeting. So we'll have a very, we are looking forward to very fruitful and very engaging conversation with the global community in the investment markets. So that will be a very interesting event going forward.
With that, I think Nilesh Bhai is just joining in. Thank you so much, Kishorji. And may I now request Nilesh Bhai to join us once again. He has been a regular speaker at our events, and it's always a pleasure to listen to Nilesh Bhai. A brief introduction will follow once Ujjwal confirms Nilesh Bhai is in the house.
Yep, Nilesh is on the screen.
Hi, Alok Bhai.
Namaskar, Nilesh Bhai. Welcome once again to another vibrant edition of World Investor Week. This is, I think, the third year in a row that we are having the pleasure of your company and your guidance. Let me just spend a few seconds on a couple of formalities that we need to do before I hand over the floor to you, because the entire audience is just waiting for listening to you and pearls of wisdoms that come from you. Mr. Nilesh Shah, Group President and Managing Director of Kotak Asset Management Company, is being a friend, philosopher, and guide of the BSE Brokers Forum. I take the liberty of saying that. He is the Managing Director of Kotak AMC. Nilesh Bhai leads his team to the Best Fund House of the Year award at all mutual funds where he has worked. Kotak, ICICI Pru, Franklin Templeton. Nilesh Bhai is the part-time member of Economic Advisory Council to the Prime Minister. He is a member of the Board of Association of Mutual Funds of India and member of COBOSAC Committee of SEBI. With these few words, Nilesh Bhai, the floor is all yours.
Thank you, Alok Bhai, and very good afternoon to everyone. My topic is a slightly difficult one, predicting market in the year and the next. If we look at the markets currently, and this is the quote I read on Twitter, stocks are falling as if there is a recession. Oil prices are rising as if there is no recession. And now they are rising even more thanks to geopolitical situation. Gold is falling as if inflation has gone. Interest rates are rising as if we have double-digit inflation. Commercial real estate is falling as if there is a subprime crisis. And housing prices are rising globally as if interest rates have started being cut. In all the markets, we are seeing contradictory signal. Equity pricing recession, oil not pricing recession. Gold pricing demise of inflation, but central bankers cautious on inflation. Commercial real estate pricing a crisis, but residential real estate pricing a recovery. In this kind of confusing market, how does one take a call? And it's not that just markets are confused. Even Fed and other regulators have talked in a different language multiple times. In March 20, Fed made a statement that inflation they are not afraid of. By Jan 21, they said inflation is increasing but transitory. And today they are saying that we are likely to stay at inflation in 3% range for whole of next year. Why is regulator giving contradictory message at different point of time? Why are markets signaling different contradictions? I think the whole thing can be summarized in one form. Central bankers are raising interest rates to control inflation, but at the same time providing more than adequate liquidity to ensure that growth doesn't suffer. They don't have a choice because globally countries have to take more and more debt to create $1 of GDP. Second, the debt burden, especially in the bottom half of society, is probably unserviceable. In US, their GDP is 7 times higher than India, but credit card debt is 40 times higher than India. Student loan is 90 times higher than India. In fact, American student loan is double the size of India's all personal loans put together. Now, there is a demand to foreclose student loans. Earlier, government of America proposed $400 billion write-off. Supreme Court of America strike it down. Now they are proposing $100 billion plus write-off. They're also saying that if you don't service your student loan for next 1 year from September 23, it won't be damaging your credit score. Officially, there is a moratorium given for student loans in US. This kind of uneven recovery is pushing regulators to walk on a thin ice, keep rates higher to control liquidity, keep liquidity higher to support growth. Will this gamble play out? Time will tell. In that context, Indian economy is witnessing what is known as Birbal ki kahani. Akbar asked Birbal to make a line bigger without touching it. Birbal drew a line below, which was smaller, and the line above became bigger. Same thing is happening with India. Our growth story from economy point of view was reasonable in place. The capacity utilization is now 76% plus. Our share in global goods and services exports is increasing. Remittances are crossing $100 billion. The government infrastructure investment is front-loaded. Trade deficit, despite rising oil prices, is well under the comfort zone. Rupee has been remarkably stable, partly due to RBI intervention. Private sector have started announcing investment plans. Some of them are getting executed. Some will probably get executed post-election. But corporate balance sheet shows 15-year low leverage. Consumer sentiments have started improving. Monsoon recovered late in September and probably bridge the deficiency from double digit to mid-single digit. Overall, our growth story looks attractive. Fortunately for us, other peer groups have scored self-goals. Russia invaded Ukraine. China has designed on Taiwan and is managing their real estate bubble. South Africa has social tension. Brazil has communist government. Turkey has extremely unsound economic policies. Net बाकी लोगों की लाइन छोटी हो रही है तो अपनी लाइन बड़ी दिख रही है. There are dark clouds emerging on horizon thanks to cartelization by Saudi and Russia. Oil prices are threatening to go to triple digit. Israel-Hamas tension is also keeping oil on the boil. While monsoon deficiency recovered from double digit to mid-single digit, the temporal distribution of monsoon could impact Kharif prices. Water reservoir level in southern India is 50% below its 10-year average. This could impact Rabi crop in southern India. US Fed is saying that we'll keep rates higher for longer. That could impact flows into India. The IT sector, which used to recruit lakhs of people, is this year witnessing almost negligible growth and may end up with deficiency. All these dark clouds will have some impact on our market and our economy. For markets to run, you require three things: funds, sentiments, and fundamentals. From a fund flow point of view, domestic institutional investors like mutual fund are getting good inflows. At lower level, unlike in the past, we are now getting higher inflows. As long as there is confidence on India growth story, my feeling is that at every level, and especially at lower level of market, there will be higher participation in mutual funds. Mutual funds have also built about 250,000 crore of war chest. We are having somewhere between 125,000 to 150,000 crore by way of cash balance in our equity. If market corrects significantly, that cash will be deployed. We also have balance advantage fund category. The total corpus there could be 2 to 2.5 lakh crore, and a 40% swing from debt to equity and vice versa could create 80,000 crore plus flows into equity market in a falling scenario. The SIP flows is about 15,000 a month. If this correction is over three-month period, we'll end up getting 45-50,000 crore from SIP. So about 125 to 150,000 of cash, about 60 to 80,000 of balance advantage asset allocation money, and about 45 to 50,000 crore of SIP flows. Net mutual funds will be able to deploy anywhere between 2 to 2.5 lakh crores in case markets correct significantly. Insurance industry, pension industry, retail and high net worth individual investors, all will be a buyer in a falling market, in a cheaper market. Global investors today are looking to invest in India. We are increasingly seeing higher interest about India. We are one of the largest local fund manager managing offshore money in India. In fact, India's largest India dedicated fund is now a Kotak India mid-cap fund. And we are seeing flows into our offshore funds to invest in India from across the world. Put together, my feeling is that global investors also will be like local investors, big buyers at lower levels of valuation. Net from a fund flow point of view, markets will be well supported at cheaper valuations. The corrections are likely to be shallower than what everyone will expect. The second thing is sentiment. Sentiments are decidedly positive for India, albeit US interest rates higher for longer, oil remaining in triple digit, monsoon impacting Kharif and Rabi crop. All those things can impact India's story in the short term, India sentiment in the short term. But over a period of time, they will turn out to be a speed breaker. Sentiments are likely to remain positive towards India as it is truly an oasis in the desert. Most important thing is fundamentals. Today, corporate India is witnessing between around 4.5% of corporate profit to GDP trend. Profitability is reasonably strong across industry. Large, mid, small, they are all growing at a reasonable pace, and the loss pools are shrinking rapidly. Oil marketing companies, telecom, public sector banks, they were all leading loss makers. Now most PSU banks have turned into huge profit. Oil marketing companies are getting compensated by the government, and even current higher oil prices, while impacting their profitability, they will get suitable compensation from the government. Telecom competition has come down significantly. Put all these things together, profit pools are expanding, and corporate profit to GDP ratio of about 4.5% is likely to continue. We believe Nifty will score an EPS of 1100 to 1150, somewhere in that ballpark number for FY25. Our earnings are growing at 1.25% a month. If market stays in the same place for 6 months, markets will become cheaper between 6 to 9% in that period because of earnings growth. So there is Triveni Sangam of funds, sentiments, and fundamentals in Indian market. Like there are dark clouds gathering on our economic horizon, there are some pockets of worries in market. As you come down on capitalization, valuation should become cheaper. Large cap should trade at a premium to mid cap should trade at a premium to small cap should trade at a premium to micro cap. Unfortunately, this relationship is broken in many cases. Many mid caps trade at a premium valuation higher than large cap. Many small caps trade at a valuation higher than large cap. And many micro caps are trading at valuation higher than large cap. Generally, this stock and herd mentality buying by retail investors, by speculators is resulting into this scenario where micro caps, mini caps, small caps, SME, IPOs, they are all trading little to way above their fundamentals. This is one space which is avoidable. What should you as a market participant do? One, if you are a trader, please operate with strict stop loss limits. These are very volatile markets. Events are happening at a fast pace. And clearly markets, instead of moving in unidirection up move, will be moving in both directions. If you are investor, do remember that markets are around their fair value and hence you should have neutral allocation to equity. If you are leveraged, if you are over invested, please take some profit out, especially among micro cap, mini cap, small cap, and keep some dry powder in your portfolio to take advantage of correction, which may come in the form of price correction, that is stock prices coming down, or time correction where prices consolidate at current level. The trend of the market will depend upon one, when does US Fed think about cutting rates? Today it looks like mid-24 will be when US Fed will start cutting rates. The second will be election 2024 impact. Right now, market is discounting absolute majority Modi Sarkar. Any surprise or a shock over there could have impact on market. The third thing will be oil prices, energy prices. We can afford, let's say, $85, $90, $95 a barrel of oil, but anything above will have its own impact on market. We'll have to also see rural recovery, consumption recovery that has remained subdued. India is witnessing K-shaped recovery where top half of the population is benefiting more than the bottom half of the population. So there are undoubtedly certain challenges in market, but the long-term India growth story remains good. Long-term India growth story remains good because of growth, governance, and green, the 3G. Our earnings growth will remain in somewhere around low double digit. In most countries, that will remain in low single digit to mid single digit. We will grow our earnings faster than rest of the world, and hence investors will get attracted to our market. India was 12th largest economy in 2010, became 10th largest in 2014, is now 5th largest, and will become 3rd largest by 2030 or before. This earnings growth is propelling investors towards our market. The second thing is governance standards. Our governance standards are far, far superior to rest of the world. In China, their foreign minister disappeared few months ago. Now the defense minister has disappeared. Their entrepreneurs and businessmen disappear, and companies have to inform stock exchange that we are not in touch with our founder, our owner, our manager, and will let you know when something is known to us. In many parts of the world, promoters, managers take shareholder for a ride. In India, thanks to Securities and Exchange Board of India, corporate governance standards have improved significantly. Ministry of Finance, Ministry of Law also supports better governance through regulations, and hence our governance standards remain better than the rest of the world in emerging market, and it's comparable to developed market. The third thing which we haven't marketed enough is India's green commitment. We are the lowest per capita carbon emitter in the world. We are one of the few emerging markets which is on its way to achieve COP26 commitment. We haven't asked the world about funding India's green transformation. It's happening from our resources. We haven't polluted the world like Americans and British and Scandinavians have done, like the Middle Easterns have done. We are the lowest per capita carbon emitter in the world, and hence our green transformation, if not funded by overseas investors, should be supported by way of premium valuation. This 3G of green growth and governance is likely to bring investors into India and also reward them. Overall, we believe while there are dark clouds emerging on our horizon, the long-term growth story remains fairly solid. Markets are fairly priced in large and larger mid-cap. There is some froth in small cap, micro cap, mini cap, SME. This is the market where one should keep some dry powder for correction if it comes. No guarantee it will come, but some dry powder will come handy in case it comes. Stay invested for a longer term. From a sectoral point of view, large and larger mid-cap looks better from a risk-return point of view than small and micro-cap. Sectorally, we believe quality companies will do well. In today's market, Gade and Ghode both have run up, but it's time to bet on horses rather than donkeys. With that caveat, from a sector point of view, we think manufacturing theme should do well. Banking and financial services have been derated and hence should do well from a valuation point of view as well as business point of view. Pharma has outperformed in last 1 year or so. It should continue that trend going forward. Construction materials is also witnessing higher activity thanks to budgetary spending. We think they should also continue to do well. Sectors which look vulnerable right now is one, IT sector, a lot of uncertainty for volume growth. If September quarterly results, they give confidence about growth, then it becomes a buy. Pharma is something which has done well, and it should continue to do that on the back of some of the strategic deals which are likely to happen at a higher valuation than market price. Overall, we believe this is the market to stay with quality. Be little cautious of dark clouds gathering on horizon. Take some profit out of small cap, micro cap, mini cap, but remain long on India growth story as the speed breakers will be overcome and will be back to our growth rate. With this, I'll end my talk, but if there is any question, Alok bhai, happy to take.
Certainly, Nilesh bhai, that there are a host of questions and we will take them one by one. First of all, thank you so much for this a complete 360-degree view of what the current state of markets are, how investors should behave, and some of the themes that you have very candidly shared with us. You mentioned that oil is on the boil, and we are okay till levels of 85, 90. But with this new skirmish unfolding with Israel and Hamas, what, in your considered opinion, will be the trajectory of oil?
So, Alok bhai, oil is rising because of cartelization. A lot of people are not talking about it, but why hide the truth? Saudi-led OPEC and Russia-led non-OPEC have taken out 3 million barrels of oil from the table. That's 3% of global supply. The demand is rising, but supply has been curtailed, and that's why we are seeing higher oil prices. Now, with this Hamas terrorist activity on Israel, we are in a geopolitically tense situation. Neither Israel nor Palestine is producing any material oil for world to bother about. But Iran, which is supposedly supporter of Hamas, is a large producer of oil and in fact is producing excess oil to bridge the deficit. If anything happens to them and their oil supply, certainly oil prices will flare up. So keep a watch on this escalation. Does it remain a conflict between Israel and Hamas? Or does it become conflict between Israel, Hamas, and Iran? I believe there was a WhatsApp message. I don't know how authentic it is, but a convoy traveling from Iran to Syria was attacked and destroyed by Israel. Now, these are all signs of escalation. And right now, it will be fair to assume that oil prices could go further higher unless until some miracle happens whereby this thing de-escalates and Saudi and Russia decides to increase the oil supply.
Also, a small point, if I make, is in the fog of war, one never really knows whether it's a false flag attack or there's actually been an attack on the convoy, and there are too many pulls and pushes that happen. So, as they clearly call it, the fog of war, one has to be very, very careful. 5 state election schedules have been announced. What do you think is the performance of the ruling party in the state elections and its impact thereon on markets, and what should investors be doing?
So generally, Alok bhai, people wouldn't care about state election. Markets does not necessarily get impacted materially and longer term by state election results. The issues for state election and central elections are quite different. What people will be closely looking forward is, are the political parties going to win election on the plank of growth, development and governance, or freebies? India is a poor nation. It cannot afford freebies for everything. Free food, yes, we can afford it and we should give it. But giving free laptop, free mobile phones, free bikes, free petrol, free telephone, all those things are unaffordable. What we need is better governance so that jobs can be created. What we don't need is continuing this free food for 80 crore Indians. We can't allow any Indians to go hungry. But the solution is jobs, not free food. There should be a plan to shift from free food to jobs, to growth, to development, to income. And clearly in all these 5 states, as of today, there is a competition between which political party will provide maximum freebies. We don't have fiscal resources to support that. And how will we fund freebies? That's the most critical thing which market will be looking in this election. I hope and pray that voters don't get swayed by freebies, but they vote based on growth, governance, development, job creation, and sustainable, solid economic performance.
How do you see the inclusion of India in the JP Morgan Debt Market Index?
So it's a positive step. Alok, if you remember, when domestic institutional investors started managing money in equity in the late 80s, early 90s, our governance standards were very poor. We had all kinds of wild west things happening in our market. It was the entry of foreign portfolio investors which improved our governance standards. Obviously, domestic investors then learned from global investors and started pushing it. I believe participation of global investors in India's bond market will bring prudent monetary and fiscal policies. Unlike in equity where governance standards were poor, our fiscal and monetary policies are already prudent. But we just hope that with the entry of foreigners, this freebie culture will remain under check. Implementation of FRB kind of progressive law will get executed. I mean, FRBM we had, now it was put in abeyance, it again gets executed. The second thing is that RBI gets leeway of about $30-35 billion from here till March 25 to manage external account. We have 4th largest FX reserves in the world. So this $30-35 billion are not going to make big material difference, but more the merrier. This $35 billion will also help in lowering Indian yields on the government borrowing program. It will also help fund our current account deficit. So inclusion in bond indices is win-win for global investors and India. Hopefully, it will allow us to maintain prudent fiscal monetary policy, lower yield on government's borrowing program, give more elbow room to RBI to manage external situation and rupee, and fund our current account deficit. Investors will get positive real return on their investments. So net win-win for both.
I think sorry, I think I lost you. There was a break in communication.
Sorry, I said net is win-win for both.
Right. You mentioned for investors to keep some dry powder on the side. Two-part question. How much of their capital should they keep aside as dry powder?
So it varies from individual to individual, but I will recommend keep 5 to 10% of your total portfolio in liquid debt instruments or cash, so that in case there is correction, you can become overweight equity.
And the second part of the same question was, what happens if that proverbial or the expected correction does not come? Then investors feel, "Hoon to rahi gyo."
So there's perfect, Alok, but there's no guarantee that corrections will come. But in your existing investments, where you are equal weight equity, will continue to give return. This is more for icing on the cake. Don't take the entire cake out. Keep the cake there. The icing on the cake is this.
But Nilesh bhai, over our years of experience, what we've seen is that the retail investor is generally a very impatient investor. They want returns yesterday. Of course, there is a breed of investor who's very patient and willing to wait it out. And but those are the ones who don't seek advice. They already know what to do. But the average investor is a very impatient investor. So to rein them in is quite a challenge, and especially in today's day, age, and time, where SEBI has expressly stated that 90% of people playing in F&O are losing money, yet investors are flocking to the futures and options market because of that promise of high return. What would you say to such investors? Your words of advice.
Alok bhai, learn from others' mistake rather than committing your own mistake. All of us have seen how people lose money when they become greedy. Lobhya hoy tyan dutara bhukhe na mare. And our markets have consistently proven that. As Indians, we have special ability to go and speculate, trade, invest where there is higher opportunities of losing money. In mutual fund, which have delivered consistent return, there are 4 crore investors. But in crypto, where there was higher risk, 18 crore investors then lost money. In gaming, 10 crore players played and lost money. In Ponzi scheme, more than 2 crore Indians have lost money over last 2 decades. NFTs, again, so many HNIs lost money. So my request is investment, let it be very simple, plain and boring. Please don't experiment in areas like cryptos, NFTs, Ponzi schemes, F&O trading, commodity trading to lose money. You are far better off doing SIP in mutual fund and staying invested and making money.
So most often than not, investors are looking for a thrill in the market. And I think that is what leads them to experiment more and more. If you suggest them SIP, they say, हाँ, पता है, पर और कुछ बताओ. So that is where yes. I think the challenge is. This, happy situation that we have of 15,000 crores of SIP coming in monthly. In your opinion, if markets are to correct, do you see this number going down significantly, or what percentage would it go down by?
I think, Alok bhai, we have to truly appreciate work done by mutual fund distributors, and many of the stock brokers, BSE brokers are large mutual fund distributors. They have really hammered this concept of SIP among investors. The experience of investors in SIP has been nothing less than a miracle. And I have seen from March 20, by and large, whenever markets have corrected and become cheaper, we get SIP plus lump sum in aggregate. And instead of 12, 13, 14, 15,000 crore a month, we end up investing 15, 20, 25,000 crore a month. Whenever markets are expansive, SIP remains, but redemption comes. And hence, my need to invest money becomes 1,000 crore to 5,000 crore. My feeling is that retail investors will continue to behave maturely. We will see very matured behavior collectively from retail investors. And hence, in a cheaper market, there will be SIP plus subscription. In an expensive market, we will witness SIP minus redemptions.
Fantastic. So all in all, because I think it is this SIP flow partly that helped cushion the impact of the FII selling that we witnessed last year.
Absolutely.
In one of your recent...
In March 20, when FPIs were sellers, yeah, look.
Yes, sorry.
In March 20, when FPIs were sellers, In March 20, when FPIs were seller, retail investors invested in mutual funds and we were able to buy things. Between October 21 to June 22, when FPI sold 250,000 crore, again mutual funds could take them out because of retail investors subscribing into our funds. I think now foreign investors also would have recognized that in Indian market there is depth. You can sell $8 billion worth of HDFC group shares and you can still get your money back. Try selling $8 billion shares in Chinese, Brazilian, South African, Turkey, Indonesian, Mexican market. तब पता चलेगा दूध का दूध, पानी का पानी क्या होता है. Very recently we read a statement of Dr. Mark Mobius who sold shares in China but couldn't put money out. हमारे यहाँ पे two-way street है. In most markets there is one-way street. जा सकते हो, बेच नहीं सकते. Now, MSCI kind of index agencies don't punish China for doing this. They were threatening us to punish when Nifty said, NSE said, then my Nifty can't trade on Singapore Stock Exchange. वहां पे उनको मिर्ची लगी. But जब चाइना बोलता है आप बेचो, but पैसा बाहर नहीं लेके जाओ, चुपचाप बैठा है भीगी बिल्ली की तरह. जब चाइना बोलता है डाउन टिक पे मत बेचो, चुपचाप बैठे हैं. जब चाइना उनकी बैंक में 20% लिमिट लगा देता है तो कुछ नहीं बोलते. यहाँ पे HDFC बैंक में 74% लिमिट है तो बोलता है नहीं नहीं अभी एडिशनल स्पेस नहीं है तो हम आपको कैसे इंक्लूड करें. This kind of pathetical behavior of index agencies also needs to be taken into account.
No, absolutely, it needs to be called out. And, you know, the very standoffish behavior by even some of the agencies from Europe, they had, you know, they wanted right to inspect Indian clearing corporations and so on and so forth, whereas is quite unbecoming. And, you know, I think, don't you think it's time we've gotten out of the emerging market mold? Why are we still called an emerging market? Aren't we emerged enough? We are perhaps the only country in the world that has a T+1 settlement system. We are, you know, in terms of regulations, we are up there. In terms of infrastructure, we are good. So what would you say about that? The mindset that we are still an emerging market.
I think we need to market ourselves better. Our content is good, marketing is poor. There are many people who become jealous of a rising nation, and that jealousy is visible. Some of them are funded by China, who can't witness India's growth. Some of them are driven by their old colonial mindset. But net, we have to engage with the world on our terms. When India got included in JP Morgan bond index, it didn't give any tax concession. It did not give any settlement concession. It did not open debt market for global investors without any limit. The inclusion happened on our terms. Same way, we are the lowest per capita carbon emitter in the world. The world needs to recognize this. Otherwise, we'll end up destroying planet for ourselves as well as them. And they need to pay a price for it. We also need to engage with investors about our exchange infrastructure, settlement infrastructure, payment mechanism. They are better than the best in the world. We need to talk about our governance standards, which are better than most emerging markets and comparable to Western world. India today gets a premium valuation for all these things, but we must talk about it so that that premium valuation is sustained. Today, part of our premium valuation is coming because others have scored self-hold. Tomorrow, our premium valuation should sustain because we are better in governance, we are better in green transformation, we have first world infrastructure for exchange and settlement and payment. All those things will make India growth story more powerful, more robust, and command a premium.
But in the same breath, a weak Indian rupee, how does that impact foreign fund flows?
So undoubtedly foreigners will prefer rising rupee rather than depreciating rupee. But rupee is market driven. RBI intervenes to manage volatility, not to set direction. Now, if our productivity and inflation is more than our, unlike many other central banks, and as long as our inflation and productivity gap is there vis-a-vis our trade partners, rupee will have to depreciate. But we are narrowing the gap. And somewhere in the past, when rupee had to depreciate in high single digit, low double digit, now we need to depreciate in low single digit to compensate for the inflation and productivity gap vis-a-vis rest of the world.
In one of your recent tweets, you am I audible, sir?
Yes, yes.
Yeah, sorry. In one of your recent tweets, you highlighted.
I can hear you, Alok bhai.
Yeah. Thank you. In one of your recent tweets, you highlighted mid-cap outperformance is huge compared to Nifty 50. Do you think we have reached a peak for the time being?
Alok bhai, never say never in market. If we had the ability to predict market, naukri thodi karte, trading hi karte. But you can sense the direction, you can sense the valuation. We haven't seen a crazy IPO yet, so I'm not 100% sure whether markets have reached the top. We haven't seen Master Gain 92 equivalent or Morgan Stanley equivalent craze of 92. We haven't seen a power company IPO or a payment company IPO like 2008 and 2021. So there is no euphoria visible in the IPO market, which doesn't give me confidence to say that markets have reached top. But I can see the variation between mid-cap valuation and large cap. Large caps are around their historical average, and mid and small caps are above their historical average. This kind of weight is as a warning signal, and which is where I said keep equal weight, not overweight on equity.
Ujjwal, is Nilesh bhai online? I can't see him on screen.
I'm back, Alok bhai.
Sorry, the screen froze, and my part of the screen froze, and I couldn't. I think I missed a large part of your 5-6 sentences, but possibly there's a weak connection at my end. So if you finished, I can move on to the next question.
Alok ji, sorry. I think Nilesh ji got disconnected and connect again.
Okay, fantastic.
So there was a connection issue at my end. I got disconnected and then I had to re-log in.
Fair enough. Fair. But by and large, even the physical infrastructure, the wave that we are witnessing throughout the country, I think is unprecedented in our lifetimes. As youngsters, we could only dream of having access to such kind of highways, metros, plethora of cable television, the kind of internet speeds. I remember we used to do the dial-up connection of VSNL, and it used to take forever to connect to the internet compared to now, where everything is just at the flick of a switch.
So Alok bhai, we are witnessing mathematical equation of 67 equal to 10 being proven correct. Infrastructure which was built before 2013, and I'm saying large part of that was built between 1947 to 2013.
Right.
That is getting replicated in 10 years from 2014 to 20. There is higher allocation for infrastructure creation. There is better execution. Execution can still improve, but clearly there is 67 equal to 10 being played out in road, port, airport, power, telecom, electrification of railway, highway construction, and so on and so forth. Yes.
Also probably our market cap. Also our market cap.
Yes. But market cap is a function of all these things. It's a byproduct. It's not something which you can aim for. The infrastructure growth, market cap will follow.
You commented that the RBI policy is like Kapil Dev policy. What would be a word or phrase you can use to describe the investment policy to all young investors?
Investment policies like, our favorite cricketer Sunil Gavaskar. He never threw his wicket out. He will stay on the crease. And many a times it was said that agar Gavaskar out ho gaya, to baki 2 se 10 wale to वैसे ही वापस आ जाएंगे. He didn't care about what kind of support he had from the team. He focused on ensuring that his wicket was never given away. Of his era, he was the world's best opening batsman and one of the greatest all-time batsmen. For him, time on the pitch was more critical than timing the shot or timing of the ball. Never give away your wicket in the market. That means always remember 2 rules. Rule number 1, never lose money. Rule number 2, never forget rule number 1.
No, I think these are golden rules that all young investors should remember. Hindi mein there's a phrase, "Gaanth bandh lo ye baat." I think this is what needs to be done with this. We are almost coming to the end of our questions, Nilesh bhai. There's one question which I have to take. What drives Nilesh bhai every day at work? What drives you personally?
आलोक भाई, अपना जॉब ऐसा है जहाँ पे पैसे तो मिलते ही है, बट लोगों की दुआएं भी मिलती है. अगर मैं किसी को अपने सपने साकार करने में मदद कर सकता हूँ, उनके पैसों की कदर करके संभाल के उन्हें फाइनेंशियल सिक्योरिटी प्रदान कर सकता हूँ, तो वो मुझे दुआएं तो देंगे ही देंगे. दुनिया में कितने ऐसे जॉब है जहाँ पे आपको पैसे और दुआएं दोनों मिलती है. बस ये दुआएं बटोरनी है मुझे अब. आलोक भाई, एक कविता है कवि मकरंद दवे की, गुजराती में है, मुझे बहुत अच्छी लगी हमेशा. गमतू मलिए तो गुंजे ना भरिए, गमता नो करिए गुलाल. I believe God has been kind to me and it has given me some investment skills. If I deploy it for myself, I'll become far richer. But my financial security is already taken care. Now I should use my skills for the benefit of society, for the benefit of other people. So, अच्छा मिला तो जेब में मत डालिए, सबके साथ बांटिए, खुशियां वैसे ही बढ़ेगी, दुआएं वैसे ही मिलती रहेगी.
Fantastic. So one corollary to this, in this day of acquisitiveness, and this is a lot for youngsters because they believe enough is never enough. How do you draw that line saying enough is enough? And now it's time to give back to society or trying to move for the greater good. And at what stage of an individual's development should one, or how does one move towards the maximum of enough is enough? Because in today's day and age, it's enough is never enough.
तो हमारी संस्कृति हमें हमेशा जो आगाह करती है. First 25 years of life focus on education. That's brahmacharya ashram. Next 25 years focus on wealth creation. Focus on family. That's gruhastha ashram. Next 25 years focus on society. That's vanprastha ashram. And last 25 years focus on yourself. That's sannyasta ashram. These are the 4 compartments in which all of us will have to go. किसी के 25 साल 5 साल में पूरे होंगे, किसी के 35 साल में पूरे होंगे. But move in this journey of brahmacharya ashram to grihastha ashram to vanprastha ashram to sannyasta ashram as per your convenience, as per your desire, as per your knowledge.
Fantastic. I think this is a very simple formula and an attainable formula. And all the youngsters listening to me, yes, make money, make lots of money, but also at a point in time, say enough is enough and move on for greater good of the society, greater good of the country. And that is what will lead us to the greater dawn, into that heaven, my father, let the country emerge. And that will be the era of true Bharatvarsh. With these words, Nilesh Bhai, I thank you once again from the bottom of my heart on behalf of BBF, on behalf of all the thousands of investors who've joined us today. Thank you very much. And hope to see you next year again.
Definitely. Look forward to that.
Thank you so much.
Thank you.
We now move on to our next session, which is a session on investment opportunities for resident Indian in global markets through Gift City. Here we'll be talking about a global outlook, and we have a galaxy of, again, excellent speakers who I will turn by turn introduce to you. Ujjwal, do we have our first speaker in?
Yes, Arjunji is there.
Yeah. So we are 2 minutes before schedule. So am I allowed to continue, or should we wait another couple of minutes before we move?
We can continue, Alokji.
Yeah. So I have great pleasure in introducing Mr. Arjun Prasad, who is the General Manager of International Financial Services Center Authority, IFSCA. Arjunji is a General Manager at Gift City, Gandhinagar. He's IFSCA, Gift City, Gandhinagar. He's in charge of the division dealing with primary markets. During the last 3 years with IFSCA, he is involved in policy making in several areas in the capital markets, including issuance and listing of securities regulation and capital market intermediaries regulations. Prior to joining IFSCA, he has experienced over 12 years in capital markets with SEBI and has handled various portfolios, including investigations, international affairs, takeovers, buyback, and delisting. He has done his MBA from IIM Indore and BTech from IIT Madras. Over to you, Arjunji.
Thanks, Alokji. So am I audible?
Absolutely, loud and clear.
So first of all, on behalf of IFSC, I would like to thank you and BSE Brokers Forum for organizing this event on the occasion of World Investor Week. So thanks a lot. So I'm having a brief PPT slides. So just allow me a few seconds.
Please go ahead. The floor is all yours.
Yeah, so first of all, let me go into the concept of Gift City, which is Gujarat International Finance Tech City. And then we'll understand about IFSC, International Financial Services Center. So Gift City has two parts. One is the domestic tariff area, which continues to be the domestic India. And the second is the special economic zone, SEZ part, where again we have multi-services economic zone, where there can be some export of IT and other services. And the SEZ of GIFT City has been notified as the India's first and only international financial services center, IFSC in India. So out of 884 acres, around more than 600 acres is the domestic side, and around 260 acres is of the SEZ where IFSC is located. So it is important to understand the difference where we have the domestic side continues to be regulated by the domestic regulator, and the IFSC is the one which is designated as the non-resident zone from FEMA perspective. So that is the international zone which is located in the SEZ. So the IFSC was set up in 2015. So that time the services were regulated by the respective financial sector regulators. So we had SEBI for the capital markets, we had RBI for the banking sector, IRDA for the insurance, and PFRDA for the pension fund. So SEBI came out with the IFSC guidelines in 2015, and GIFT IFSC started the journey. So in 2019, Government of India decided to have a separate unified regulator for IFSC, and the IFSC Act, which is International Financial Services Centers Authority Act, was passed and notified in December 2019. So our journey as IFSC started in 2020 when by way of a notification, April 27, IFSC was established, and we got the power of regulating IFSC in October 1st, 2020. So after the notification of Section 13. So we are around 3 years, more than 3 years old now, and IFSC has done several steps to develop the ecosystem here in various sectors of the financial services. So as a concept, as I mentioned, we are a unified regulator. So we have we regulate the securities market, the banking side, the insurance side, and the pension fund. And our mandate is to develop and regulate financial products, financial services, and financial institutions in the IFSCs in India. So I would like to stress upon here that our mandate is dual. One is the development of the center, and then as a regulator of the center. So we try to come out with new products which is more in the development kind of nature, since it's a new start for IFSC, and we are relatively a new jurisdiction compared to the other financial centers in the world. So in terms of the IFSC Act, this is a very unique act in terms of the powers which are there. So there is Section 13, which says that the powers which have been provided for the respective sectoral regulators, that is a combined of 15 acts. So all those powers can be exercised by IFSCA for regulating financial services in IFSC, which means we get the powers from 15 acts plus the IFSC Act. 16 central acts we can exercise the powers. So when it comes to capital markets, we can exercise the powers of SEBI Act, Depositories Act, and SCRA. So we can come out with any regulations under using the provisions of all those three acts along with the IFSCA Act. It's a very powerful act in terms of the regulatory provisions which are there for regulating the IFSCs. And additionally, we have a notification power under Section 31, where central government can issue a notification to modify or disapply any provisions of any other central act for application in the IFSC. So these kind of powers are required because we are very unique in terms of the way it has been set up. It is a non-resident in terms of FEMA, but for other purposes like Income Tax Act, Companies Act, we are a part of the Indian laws. So very briefly coming to the vision of the Honorable Prime Minister of India for GIFT IFSC. So these are very important visions for us, and we work towards achieving these visions. So the vision of India's future is associated with the GIFT City. And the second part, which is very, very important, is GIFT City as an important gateway to connect India with global opportunities. So it can be both ways, attracting more and more capital into in India, and we can be the gateway for various outbound financial services from the GIFT City. So when you integrate with GIFT City, you will integrate with the whole world. So the idea is that we should have linkages with various parts of the country, and our IFSC can act as an international center for India. So the third important vision, which again has been highlighted by Honorable Prime Minister, is IFSC will not only become an enabler, but will also support innovation and will also act as a catalyst for growth opportunities. So we have various initiatives to promote innovation within GIFT City and IFSCA, for example, on the fintech side and on the other areas. So with that vision, we have our own goals and objectives. So these are 5 important objectives of IFSCA. So we strive to become the facilitator for development of strong base of international financial services in the country. For the domestic, we already fully developed markets in the country. So here at IFSC, we try to develop the various international financial services in the country, which are basically foreign currency denominated financial services, whether it is banking or the capital markets or insurance or other services. And to promote IFSCs as a dominant gateway, again, as I already mentioned, it can be both inbound and outbound capital flows into and outside of India. Some areas we can emerge as a regional and global hub for various financial services. For example, I can give fund management. We have a very active fund management here. So we can develop as the regional hub, not just for India, for the entire region, or in fact for the global hub for those services. We have done a lot on the fintech side, on the sustainable finance side, and on the aircraft leasing. So these are some of the objectives where we can actually become the hub for the region and the entire world in terms of providing the international financial services. As a regulator, we provide state-of-the-art unified regulatory framework with robust regulations. So we compare our regulations with the global standards by the standard setting bodies and the standards which are there in the other international centers. And we strive to use technology for various regulatory purposes here at GIFT IFSC. And the 5th point is very, very important for IFSC because we are in international centers, so we need to develop connects with other international centers. I'll come later on to some of the examples where we have developed connects. In terms of the business highlights, we have now more than 550 entities registered with IFSCA. So most of them have registered in the last 3 years. More than 400 have registered in the last 3 years. And now we are seeing significant developments across the financial services. So the monthly turnover on the IFSC exchanges have increased to $67 billion a monthly in the month of August. We have banking asset size, which has crossed $42 billion. Aviation, we have 122 aviation assets leased. As Mihirji mentioned previously, we have the AIFs where more than 70 FMEs are registered and total commitment capital of more than $18 billion. And the banks, they are doing significant NDF transactions. So the volumes are $655 billion booked till August 2023. So coming to the capital markets, we have 2 exchanges. India International Exchange, which was set up in 2017 as a subsidiary of BSE Limited. And we have NSE International Exchange as a subsidiary of NSE Limited. We have both the clearing corporations set up in 2017. And we have the depository, which is a single and unified depository for all the assets in IFSC, India International Depository IFSC Limited. So we actually have all the infrastructure institutions in place as of now. So all kind of products on the capital markets can be listed and traded here. Coming to the intermediaries, we have more than 50 broker dealers registered with us. We have various clearing members. We have depository participants, we have custodians, we have investment bankers. So after the announcement of direct listing, we believe more and more investment bankers will come and register with us. We have debenture trustees, we have investment advisors, we have the full banking ecosystem. So more than 24 banks are already registered with us. We have 15 IBUs. We have several reputed foreign banks. Tansy is there, Barclays, BNP Paribas, Citibank, DBS, JP Morgan, Deutsche Bank, MUFG, HSBC. So they are present here. And in IFSC, we need the ancillary support providers to provide and the services to the various entities present here. So we have the concept of ancillary service providers. They take registration with us. So we have several law firms For example, Cyril Amachan Mangaldas, ICU Legal, Nishid Desai. We have various taxation service providers. We have the consultants here. We have trusteeship services, which provide services to the fund side. So we have the full set of ecosystem present here for the capital markets, for the banking side, for the other ancillary service providers, for conducting the financial services. Coming to the exchange traded products, the most popular products which we have is on the derivative side. So as you know, many of you know the NSE, IFSC, SGX Connect has gone fully live. So this is one area where our Nifty products were being traded on the Singapore exchange. So pursuant to an agreement between the NSE and SGX, the entire volume has now shifted from Singapore exchange on our NSE International Exchange. So full liquidity switch has happened on 3rd July. So this effectively means the entire liquidity is now on the NSE International Exchange. And we have been very successful in onshoring our product, which was previously being traded on the international markets. So this is this brings a very large liquidity pool where all the orders from Singapore is coming on our exchange, and the orders from the IFSC registered brokers are coming here. So the combined order pool is a very large pool where I believe many brokers and entities may be interested to look at GIFT IFSC and start trading on these products. So we have opportunities in terms of derivatives on various other products. For example, gold futures. We can have commodity futures. Just to give example, the exchanges and brokers can work on the crude oil side or the crude palm oil derivatives. There are various products which can be enabled once we have the brokers and the traders come here on the IFSC exchanges. So we have the product on the USD INR futures. So derivatives, we have various opportunities where exchanges and brokers can work together. So on the slide, I have compared the volumes, which has significantly increased over the years. And after the Connect going live, this has again significantly increased in the current year. So the other area where we have been very successful, our exchanges, they have various bonds listed. So the Indian corporates willing to raise foreign capital, they can come out with foreign currency bonds, or they can come out with masala bonds. The total bond listing has crossed USD $52 billion across both the exchanges. So here we are basically complementing the domestic exchanges. In case they want to raise foreign capital, they can list on our exchanges. Previously, these listings used to happen on the Singapore exchange and the London Stock Exchange. So we have been able to now move those listings on our exchanges. In fact, the government of India has given the benefit that from now, the withholding tax, if the bond is listed on IFSC exchanges, will be only 9% as compared to 20%, or as per the agreement between the countries. So there is a very big difference on the benefit which will be there for the Indian corporates if they list the bonds on the IFSC exchanges. So some of you must be aware that India is, having their targets of various targets on the climate side. So Panchamrit, most of you must be knowing that we have the net zero ambition of 2070. So to meet the net zero ambitions, there are research reports which says that $10 trillion money is required. So that entire capital cannot be met by the domestic side. Here is where IFSC can play a very, very big role. So we have taken several initiatives to promote IFSC as a hub for sustainable finance. So one of those areas is on the bond side. So we have on the sustainable finance fund side, we have other initiatives like we are working on the carbon market. But on the bond side, we have already issued the regulations which are comparable to the global best practices by, say, ICMA standards, climate bond standards, and we have attuned to the needs of the India and emerging countries. So we have the framework for green bonds, social bonds, sustainable bonds, and in fact, sustainability linked bonds. So sustainability linked bonds is slightly different from the other three categories. Here, the proceeds are not basically used for the social or green projects, But there are various key parameters where if the corporate are having their own targets, if they achieve those targets, the nature of the product, the coupon may differ based on whether they have achieved or not. So that kind of instrument also we have enabled. And considering the need of India, we understand that there are various hard to abate sectors where, for example, steel, cement, petrochemicals, fertilizers, they may not qualify strictly on the green side. So we are working on a framework where we can enable financing to such hard to abate sectors. So we, as an IFSC, are working on the framework for transition bonds. So we'll be soon coming out with some proposal in this regard. So that is something which is being worked by IFSCA. So as of now, we have already seen ESG bond listing of more than $10 billion across all the 4 categories which has been enabled. So 5.98 billion on the green side, 1.89 on the social side, 1.6 on the sustainable side, 0.7 on the SLB side. So this is one area where I believe in the coming years, so there will be many more listings on the bond side on IFSC. Coming to the benefits which resident Indians and investors can take, we have enabled global access through 2 different models. Both the exchanges, they have very different concepts. So NSE International Exchange, they have under the regulatory sandbox introduced NSE IFSC receipts. This is a very innovative concept which is probably not there in many countries. I mean, there will be hardly 1 or 2 countries in the world which will be having such kind of product where we have unsponsored depository receipts on US stocks, the top US traded stocks, whether it is Apple, Tesla, Amazon. So those securities are converted into depository receipts, and those depository receipts, the conversion can be in various ratios. For example, if the price is in say $200 in US, so it may not be feasible for our retail investors to invest $200. So those can be at 1:10 ratio, 1:50 ratio, 1:100 ratio, and make it at an affordable price for the Indian retail investors. So based on those predefined ratios, that is made available to the Indian retail investors in the form of UDRs, which is traded on NSE platform and held in the depository in IFSC, and it will be held in the demat account of the Indian investors. So that is one way of trading US stocks. So the Indian investors can diversify their portfolios. The second model, which is there of India INX. So India INX is having a subsidiary which is called India INX Global Access. So they have tie-ups with large international brokers. So as Ritesh was mentioning, they have tie-up with Interactive, with Marex, with other international brokers. So as an introducing broker, the retail Indians can directly trade on the US exchanges, whether it is NASDAQ or NYSE, Singapore Exchange. So here the investors can participate in multiple jurisdictions, and they can trade across various products, and the trading is taking place on those platforms. So here it is mainly the gateway where IFSC is playing an important role, providing access to the Indian investors in a regulated manner. So I know there are detailed presentations on these topics from NSE and India INX. So maybe I'll just stop here for any questions.
Thank you so much, sir. There are a couple of questions which I'll take. So one viewer has asked this question: how are exchanges in GIFT City different from Indian exchanges, Indian local exchanges?
So firstly, this is an international zone. So here, in terms of FEMA, it is everything is very similar to a Singapore exchange or a London exchange. So the Indian corporates, they want to trade here anything or list here or anything, it will be in foreign currency. So in terms of currency, that is the first difference which is there. So it will be US dollar or euros, but mostly actually it is being done in the form of US dollars. So that is a big difference which is there. The second is, I believe the Indian exchanges are complementing the domestic exchanges. So we are not competing with NSE or BSE. So the Indian rupees related securities will be traded on NSE and BSE, and the corporates raising foreign capital or in foreign currency, for example, foreign currency bonds will come on our exchange. The rupee bonds will be on NSE and BSE. The third important piece is there is no capital control. Since we are a non-resident zone, so the foreigners who are trading on the various instruments here and the other jurisdictions, there are no restrictions in terms of flow of capital. So the eligible foreign investors, they can trade here. And the fourth part is convenience. I think many of us have mentioned today that the trading hours are more than 20 hours. So in fact, starting from Japan to US. So these 4 or 5 elements make it very, very different from the Indian exchanges. And Indian investors, they can trade in Indian securities on NSE and BSE, and they can use our route for trading on the global markets.
Thank you for that, sir. There's another question which we'll quickly take. We are running out of time, but I must ask this. Direct listing has been announced on IFSC exchanges. So if you could just briefly, your views on this.
So Honorable Finance Minister of India, Madam, has announced in July of this year that Indian companies, which is both the categories unlisted and listed Indian companies, will be permitted to list equity shares only on IFSC exchanges outside of India. So this is a very big step and a very important for GIFT IFSC and IFSCA. So as we know, as of now, Indian companies can only access foreign markets through the route of ADRs and GDRs. So that has been there for a long period of time, but we have not seen much success in the last few years. There are hardly any new ADRs and GDRs happening. This proposal will allow the Indian companies to list their equity shares on IFSC exchanges, raise capital from the foreign investors, and that will help improve their valuation also, and they will have a bigger liquidity pool. There are some incentives given to the foreign investors, for example, trading in US dollars and no capital gains, so that will attract the foreign people to come here. In terms of benefits to IFSCA, equity market and primary listing is one of the important indicator for the overall development of the capital markets. So once we have those equity listings, then that will enable more and more participation of investors here, which will actually benefit all the intermediaries and everyone in the ecosystem.
Thank you so much, Mr. Prasad. We are completely run out of time now, and it's now time for me to invite our next speaker. Our next speaker is from Marcellus Investment Managers Private Limited, Mr. Saurabh Mukherjee, who is the founder and chief investment officer. A brief introduction about Mr. Mukherjee. Saurabh was educated at the LSE, which is the London School of Economics, where he earned a BSc in economics with first class honors and an MSc in economics with distinction in macro and microeconomics. He is also the co-founder of Clear Capital, and in 2007 was rated by Extel Survey as one of the top small cap analysts in the UK. In India, Saurabh was rated as leading equity strategist from 2015 through to 2017 by Asia Money polls. Prior to setting up Marcellus, Saurabh was the CEO of Ambit Capital. Saurabh is a founding director of Association of Portfolio Managers in India, a trade body. He continues to be a part of multiple SEBI working groups whose role is to review and reform the rules governing portfolio management in India. A very warm welcome to you, Mr. Mukherjee. Over to you.
Thank you, Alok. Thank you for inviting me to this session. I'll give a sort of quick background to how we find ourselves here. We've been very happy to set up our business in GIFT. So roughly 2 years or so ago, my colleagues and I realized that as Indians get richer, there will be demand for Indians to invest abroad. Wealthy Indian families will say, why should my wealth only be in rupees? I also want a dollar-denominated portfolio. That's when we realized the need for a GIFT license. And very grateful to IFSCA for the cooperation they extended to my colleagues through 2022. Last year, we spent a lot of time working with the IFSCA to get our license in GIFT. We found the process to be smooth. The whole registration formalities were expedited nicely. So it's in that context of being one of the first PMS houses from Mumbai, from a SEBI regulated background, going to IFSC, setting up a business there, that gives me great pride to show you what we've been able to do within a year of setting up an IFSC. I think we've been in gift for now.
Saurabh, if you can hear me, I think your voice is breaking and your screen is not visible. I think we are facing some kind of a network outage. So viewers, we are facing some technical difficulties. Just give us a few seconds while the network sorts itself out. I request the BBF team to contact Mr. Mukherjee and
on it, Alok ji.
yeah. So viewers, we request you to bear with us for a few moments while the technical difficulties are being sorted out, and we'll be back with you very soon.
Can you hear me, Alok?
I can hear you, but I can't see. You're not visible yet.
Yeah, let me just turn my camera on and let me.
Not to worry.
See, hopefully the connection will. So I was saying that through the COVID years, we realized that for affluent Indian families, at least a third of our spending is now in US dollars. And the question that then arose is, if a third of my liabilities or Alok's liabilities are in dollars, that means a third of our investment portfolio should also be in dollars. Now, can you hear me, Alok?
Yes, absolutely, loud and clear.
You can hear me, right? So that's when we decided to do some work on.
No, I think you've gone mute again. Can't hear you.
Yeah, I think connection has dropped again. He's joined back again.
Yeah, cool. Okay.
Saurabh ji, you're on mute.
Yeah, so I'll keep my camera switched off. So as we did the work through the COVID years, we realized that other than America, the only high-performing stock market in the world is India. And if you see this is the returns from the world's largest markets. These are the returns from the world's largest market over the last 10 years, 20 years, 30 years. Right, you'll see that India and America are head and shoulders above pretty much anybody else, right? So 12.8% 10-year compounding from the United States, 12.6 is India, and everybody else is some distance behind. Taiwan, this is a small market, manages to get to 10.9, but everybody else you can see is single digits, right? So this is when we realized that there's real merit in creating a portfolio for Indian investors of global stocks in Gift City. So create a business in Gift City where you help Indian families create a multi-country portfolio. And the background is easy, right? I'm sure everybody on this call realizes that when you join up the world's two largest democracies, you get formidable compounding. So the left-hand side of the screen is America, right? The world's largest economy. Our stock market has compounded in rupee terms at 17% over the last 20 years. India is on the right-hand side of the portfolio. Left-hand side is America, right-hand side is India. Right, our country's nominal GDP growth has been around 10%. Real GDP growth has been 6%. Stock market has given 13%. But astonishingly, What happens is if you combine America and India, nearly 60% of the growth in global market cap over the last 10 years, 60% of the global market cap growth has come from just these two markets, right? India and America together accounts for 60% of stock market wealth creation. No other country gets remotely as close to India and America. These are the only two countries in the world who have created in excess of $2 trillion of wealth in the last 20 years. And then if you can do a very simple simulation to understand the power of this. Suppose 20 years ago, Alok or myself or Ujjwal, Hetal, anybody on this call, if 20 years ago, any one of us had created a 50-50 portfolio, half S&P 500, half Nifty 50, and we had rebalanced that every year in January, right? Our returns would have been higher than what it would have been had we run a single country portfolio. Single country portfolio, as USA would be 10.8, Nifty 10.7. But a 50-50 portfolio rebalanced every year would have generated better returns with better risk-adjusted outcomes. Why better risk-adjusted outcomes? Why is the return per unit of risk better? Because the American market has lower downside risk than the Nifty. Nifty compounds really well, but the Nifty has bigger drawdowns. And therefore, if you combine America and India, you get better risk-adjusted outcomes. So not only do you get better raw returns, the better raw returns is the 10.8% figure. This is the 20-year CAGR, folks. But the risk-adjusted outcomes are even more superior if you combine America and India. So this is just at the index level. If you combine it at the portfolio level, right? This is all the research that we did before we launched the product. If you look at it at the portfolio level, you combine two high-quality, actively managed portfolios. Global Compounders is our GIFT product. This is the product which is based out of GIFT for our clients, both India and abroad, Global Compounders. And Consistent Compounders is our Indian product. If we combine them, returns are north of 17%. But even more interestingly, folks, look at the risk-adjusted outcomes. Risk-adjusted outcomes are significantly better than the single country portfolio. Single country portfolios are VCP and CCP. And so this is the power of GIFT. For the first time, the power of GIFT is for the first time, we're able to offer Indian families the chance to invest in global funds. Typically, if an Indian family goes to global funds in America or UK, right? If we go to Fidelity or Capital or Schroders, they will say we need at least $1 million, right? As you know, NRS quotas mean most Indians cannot practically invest more than $1 million. Unfortunately, most high quality global funds have $1 million ticket size. Secondly, investing abroad from mainland India attracts high tax rates, typically maximum marginal rate. And finally, American fund managers. The fund management house might be willing to give you and me some units, but the fund manager won't be accessible. And as a result, hardworking Indian families were missing out on wealth creation. Our job through GIFT City, through Global Compounders, has been to fix this problem, to address this opportunity. We created a high quality team. We went to America. We hired an American fund manager of Indian descent. He relocated to India. He works out of GIFT City partly. Secondly, we created a simple investment process in global stocks. First time in India, an Indian firm based in GIFT City created a global investment process. And finally, of course, you have to create a track record. Right? I won't get into the details of the product, but just to give you the sort of talent which is now available to Indian firms. Arindam Mandal, for a decade or so, for 11 years, he worked for Principal Global, managed $5 billion for them out of their main office in New York. He's first in finance from Duke University. Before that, he was a lead engineer at Oracle. Top talent, right? This is premium talent. In my brokerage days, in my previous avatar, he was one of my top clients in America. Incredibly bright guy. Then from Premji Invest, we hired their head of research. Jaybir Sethi was Azim Premji's head of research. Interestingly, when I was a 27-year-old, I had hired Jaybir out of IIM Bangalore. Jaybir worked for me for 5 years before he went off to compound Mr. Premji's billions. He did a brilliant job at Premji Invest. We were very proud to hire him back. So we got top talent managing this product, looking after this product. And the investment process, for those of you who heard about Marcellus before, we typically have a 3-step process. Identify clean companies, well-run companies, clean accounts. Secondly, look for good quality capital allocators. Spend plenty of time talking to ex-employees of the company, competitors of the company, customers of the company, and you'll be glad to hear that all of this stuff is increasingly done out of GIFT City. So our analysts are sitting in GIFT City. They're talking to customers, competitors of Microsoft or Amazon or say Costco, sitting out of GIFT, sitting out of India. We're talking to the world's largest companies, executives, their competitors, their staff members, doing research, and finally constructing a portfolio of 20 to 30 stocks, delivering alpha for our clients. And just to sort of quickly to cut to the chase, the goal was, when we launched the product in GIFT a year ago, the goal was to deliver 6 to 9 percentage points of alpha. I'm very glad to tell you that we've been more than successful in that effort. You can see the compounding in front of you, both the dollar returns and the rupee returns. And I stress again, folks, this is a small Indian firm. RCLS manages around 10,000 crores of local assets. With our savings, this is an employee-owned firm. RCLS is an employee-owned firm. With the help of the Indian regulator, SEBI, and with the help of IFSCA, we've been able to get this product off the ground with top quality global talent, generating this track record, which is in front of you. So I thought, take this opportunity that BBF has given me to highlight what's possible, what's feasible from India, from GIFT. And I thank again our friends at IFSCA for the cooperation they've extended to us over the past year and a half. Alok, back to you, sir.
Yeah, a couple of quick questions before we let you go. The registration process and the onboarding process for yourself as a firm. Just share a little bit about that at GIFT, because I'm sure there are a lot of viewers out there who are probably wanting to do something similar, but are wary of government regulation, red tape, blah blah blah. So
look, I mean, the simple construct that we used was whatever SEBI licenses we had, and our primary SEBI license was for portfolio management. We were both guided by SEBI and by IFSCA saying that we can, in effect, passport that license over. So courtesy the Indian PMS license that we have in Mumbai and in India, we were able to get a PMS license in GIFT. So obviously, first we have to be inside the SEZ, the GIFT SEZ, and then the regulator gives us a license. So if I look back at all of this work was done through the summer of 2022. Step one was registered in the SEZ. Step two was apply for the license. We went for an interview there. And then once the license was obtained, we had to get an office there. So step three was rent an office. To get before we got the license, we hired the team for GIFT, compliance officer, trader, analysts. So SEZ, GIFT license, hiring, build the office, and all of that process from beginning to end, Alok, took us, say, 5 months. From the point we kicked off the process to going live with the product was a 5-month journey. In the meantime, whilst all of that was happening, our HR team hired the investment personnel, the head of research, the fund managers, and so on and so forth.
Comparing to other IFSC jurisdictions, how would you compare this 5 months? Would it be in line, good, bad, ugly?
So look, I started my career in the UK. My first startup, Clear Capital, when you were introducing me, you referenced Clear Capital. I remember Clear Capital back in 2003, we applied for a research license in the UK, research and advisory license. This is in London. The UK regulator was then called the FSA, Financial Services Authority. That was a comfortable 8-month process, Alok, of getting a license in the UK. The Indian PMS process under SEBI was similar length, around 4 or 5 months. So in the context of given how new the IFSCA is, and given that this is the first time IFSCA is giving licenses for portfolio management, and remember this is portfolio management for the world at large, I was pleasantly surprised by how trouble-free the process was. If you ask me, the licensing itself, I think IFSCA has made very trouble-free. The infrastructure around GIFT, I think that's a little bit of work in progress. So the custodians are coming up. We're encouraging our Indian custodians to set up global custody operations in GIFT. I think that's a little bit we're hearing a good progress.
That will be the early mover disadvantage.
Right. So yeah. So we encouraged to get our operations off the ground. We encouraged one of the world's largest brokers to set up in GIFT. They got a license. One of the world's largest brokers got a GIFT license for both brokerage and custody. This is Interactive Brokers. And now we're encouraging our Indian custodians and brokers to say, why don't you set up in GIFT? We are happy to give you business. We've worked with our Indian custodians and brokers for a long time. So from what we are hearing from our Indian custodians and brokers, they are going to be setting up in GIFT early 2024, Alok.
Fantastic. One final question before I let you go. This TCS on LRS of 20%. Will that act as a deterrent?
We haven't really seen clients get discouraged. Just to caveat this, just to put one caveat, the ticket size for investing in our product in GIFT is $150,000. That's the regulatory minimum, $150,000. At that strata of Indian society, people tend to be relatively well advised. And what the HNWs who invest with us are saying is this is more a working capital hit. Superficially, it feels like a big deal, 20% le liya. But most people have realized very quickly that this is a working capital thing. I pay the TCS and then I claim it back with my taxes. Now, if you pay advanced taxes, you pay taxes every quarter, you can claim it back that quarter itself. Otherwise, you can claim it back with your annual tax filing. So it's a working capital hit rather than a 20% deduction to returns. I think at wealth levels lower than, say, our client base, perhaps people are interpreting it more adversely. But in our client base, and some of India's largest distributors are signing up with us, they're seeing this as a look through rather than a particularly big thing to be jumping up and down about.
With this, thank you so much for the clarification. I'm sure it will put a lot of potential investors' mind at rest. And yeah, thank you so much for coming over. Yeah.
Bye, everybody.
Thanks. Bye-bye. Our next session is, our next speaker is Mr. Ritesh Kumar, who's Head Business Development, INX Global Access India. A brief introduction. Ritesh is having a master's degree in finance with over 16 years of experience in capital markets. He's presently working as AGM Business Development at the India International Exchange, the first and leading exchange in GIFT IFSC. Over to you, Ritesh.
Yeah, thank you, sir. Good afternoon again. So,
good afternoon.
About IndiaNX Global Access. IndiaNX Global Access is a subsidiary, 100% subsidiary of India International Exchange. And India International Exchange is a subsidiary of BSE, established by BSE in 2017. So IndiaNX Global Access is working as an introducing broker or aggregator and providing access of global exchanges to GIFT City entities, to resident Indian clients, to Indian corporates, to non-resident clients. So clients can directly trade on NASDAQ, NYC, London Stock Exchange, Hong Kong Stock Exchange, and so on. So we are providing access of almost all major exchange markets. Our client can open account digitally, and we tied up with more than 150 BSE brokers. So clients can approach their existing broker for opening of this global equity accounts, all their mutual fund distributors. So we tied up with more than 50 leading mutual fund distributors in India. And as a referral partner, they are referring clients to INXG, and INXG is providing product and support to them. So through a single integrated account, it's a client onboarding is a complete digital, and through a single integrated account, they can access more than 30,000 global stocks, more than 40,000 mutual funds, portfolio management services, bonds, ETFs, and so on. So basically, products will be enabled based on the jurisdiction of the client. For resident Indians, RBI permit them to invest in global stocks. Resident Indians are not allowed to take leverage. Resident Indians are not allowed to trade in derivatives. So resident Indian can invest in stocks, bonds, ETF, mutual fund, and PMS products. Second type of clients who can open account with IndiaNX Global Access is Indian corporates. RBI came up with a circular in December 22 on hedging commodity price risk on foreign exchanges. So Indian corporates or Indian entities can open account with IndiaNXGA and can hedge their commodity risk on global exchanges. For that, they need an approval letter from 81 Bank. And third type of clients who can trade within the NXGA is a non-resident or a foreign clients, whether they are individual or they are corporate. So we have a few corporate accounts also. We have many non-resident individual accounts with NXGA who are trading on global markets through NXGA, and we are having few corporate clients also from Dubai and Singapore. So four type of clients who can trade on global market through NXGA is GIFT City entities, basically the member of exchanges. Earlier, before this GIFT was before 2017, mostly BSE brokers were setting up a subsidiary either in Dubai and Singapore and trading in international market from there, because Indian entities are not allowed to trade derivatives. They can only hedge. And when gifting came into the picture, now brokers are setting up a subsidiary in GIFT, taking exchange membership, and through global access, trading or doing arbitrage on various global exchanges. So these are the international brokers with whom NXGA tied up. And what are the benefits for the clients? So with NXGA, for whether they are individual clients or corporate clients, there is no account opening fee, there is no annual charges, there is no custody or DP holding charges, custody charges, there is no software fee, there is no fixed cost for the client is zero. Only brokerage will be charged or a commission will be charged. So brokerage is for US market, it's $1 per executed order. So irrespective of the trade size, even if they are buying a Google of $100 or they are buying a Google or a Facebook of $10,000, a commission of $1 will be charged. So via NXGA, so clients can obviously go directly with international brokers also, but what are the benefits with NXGA, or what are the additional edges or the additional benefit that NXGA gives as compared to other entities or a competitor in India or as well as globally? So first is like NXGA tied up with various banks and for a lower remittance fee, because Indian clients are having account in rupee and international brokers have accounts in dollar. So basically Indian clients need to remit money and banks are converting those rupees into dollar. And for that conversion, they are charging some fee. Usually most of the banks are charging 500 to 1000 rupee per transaction. And apart from it, they are charging a spread. Means if USD INR rate is 80 rupee, or interbank rate is 80 rupee, usually banks offer a rate of 81 or 81.50 or 82 to online clients. When they are buying dollars, or when they are selling, they are offering 78, 78.50 or 79. So each side on an average, they are making 1.5 rupee. So 1.5 rupee comes out to be a 2% of the value. So if you are emitting 1 lakh rupee, the 2000 will go in spread. 1000 will go in a fixed charge. So you will get a dollar equivalent to less than 97,000, right? But with the NXGA, because we tied up and we negotiated preferential rates, our banks, Kotak, IndusInd, are charging a spread of 0.5. ICICI Bank is charging a spread of 0.6. Fixed charges with ICICI Bank is 0. So clients will get a dollar of more than $99,000, 99,000 rupees. So this way, the cost of remittance, we try to bring down the cost of remittance by 70%, 60-70% for Indian clients. The another benefits which the clients does not get with other Indian competitor is like NXGA pay interest on a free cash balance. So as of now, it's 4.85% per annum. And interest will be paid on a cash balance of more than $10,000. So if a client is having $1 lakh in his account for 5 days or 10 days, he will earn interest for that 10-day period. Third benefit with NXGA is like client can lend stocks and can earn income on it. In US market is different from Indian market, because in India you cannot short sell the stocks. You can only take short position in derivatives. But in US market, you can sell the stock and you can hold your short positions for many days, right? So that is why the stock lending is very much active or popular in US. And clients having a portfolio of $50,000 or more can earn income by lending stocks. So they can give permission in the trading terminal itself. So if they will give permission, the stock will be used for lending, and income will 50% of the income will be passed on to them. And if they will not give permission, probably stock will not be used for lending. So one more benefit of NXG is like client can buy a fraction of shares. So you can buy a Google of even $1 or a Netflix of even $1, right? So one more unique offering of INXG is the PMS product. So in the trading terminal itself, because most of the clients are not aware. For Indian markets, they are aware, very well aware of the stocks, but in global markets, probably they are not aware of in which stock to buy, which stock to sell, or which ETF to buy, which ETF to sell. So in the trading terminal itself, portfolio management services are there. And they can log in. More than 75 different options are there of leading portfolio manager like Franklin Templeton, Global X, and who are having ETFs also on various global exchanges. So portfolio of basically registered portfolio managers of US, or leading portfolio manager of US, the portfolio of those are available in the trading terminal, and clients have more than 75 different choice in which they can invest, and they can invest even with $100, because this minimum limit of 50 lakh rupees there in India, but in US it's not there. So that is not applicable for the clients investing through this INXGA. So as I told you, single integrated terminal for all. If a non-resident client will open account, probably, for example, a client from Dubai or a client from Singapore will open account, probably if the client from Dubai or Singapore will open account, so they can enjoy leverage. If account size is more than $1 lakh, the 4 times leverage is there. If account size is more than $1 lakh, if account size is less than $1 lakh, it's 4 times leverage is there. And if account size is more than $1 lakh, they can choose this portfolio based margin, and leverage up to 6 times is there in the trading terminal itself. They can trade derivatives. So non-resident clients or GIFT City clients, GIFT City entities can enjoy leverage and can trade in derivatives also, right? So fundamental data of more than 30,000 stocks and tool for technical research are there in the trading terminal itself. They can check various information like company profile, key ratio, dividend impact analysis ratio, and all. And they can check the performance or the analyst rating on a particular stock. For example, in case of this is a screenshot, an old screenshot, and when I have taken this screenshot, 25 analysts, this is a screenshot of basically Microsoft. So on a Microsoft, 25 analyst has given the rating in the last 3 months, and 25 told to buy, 0 told to hold, 0 told to sell, with an average target price of 326. So this is how they can check the analyst rating on various stocks, global stocks, in the trading terminal itself. So client will get the market overview is there in the trading terminal. After login, they can check live access of Bloomberg TV. They can run various scanners, country-wise, region-wise, or worldwide, whether which stock is going up, which stock is going down, top 100, top gainer, top loser, most liquid for any given country, for any given region, for a country, or which sector is going up, which sector is going down. Apart from it, because we are onboarding client on fully disclosed basis, so each client is insured by $5 lakh by SIPC individually. And okay, this is a disclaimer. So thank you very much. That was a very short presentation. And if any client or any investor have any query, they can write to us at bdm@indianxga.com. We also have a help desk from 10 a.m. to 8 p.m. 079619932000. Anytime, any client can call for any query related to GIFT City. Team is there to help. Okay, thank you very much.
Thank you so much, Mr. Ritesh, for a very comprehensive overview of what is possible. And this, I'm sure, is going to attract a lot of prospective investors who are looking to invest in maybe a Apple, Google, or a Microsoft. Only one question before I let you go, and I have quite a few viewers have asked me to ask you. What are the taxation aspects? Okay. Are they, any earnings over here, are they taxed? And if yes, what is the taxation?
So basically, in US and in India, there is a tax treaty. So as per tax treaty, capital gain will be taxed in India with Indian rates. So there is no capital gain tax in US. In case of dividend, there is a 25% withholding tax. And suppose you have to suppose you are receiving a dividend of $100, then $25 you will receive net dividend of $75 in your hand after tax, and this $25 you can claim at the time of filing your return. So for to facilitate our clients on this taxation aspect, we are talking to ClearTax, and they will provide tax advice on latest tax regulations, because these things keep on changing. And we are going to provide a link on our website through which the clients can check the current tax implications on them for investing in global markets. Soon, probably in next 15 days, that link will be live.
Thank you so much. And with that, we come to the last speaker of the day from NSE International Exchange, Mr. Dharmesh Tejani, who's the Business Development and Product Manager. A brief introduction about Mr. Tejani. Dharmesh has pursued master's degree in Business Administration and Finance from Institute of Management, Nirma University, and he's having more than 16 years of rich and diverse experience in space of business development and capital markets, institutional equity sales, and investment banking. At NSE IX, he's working as a senior manager in business and product development. He has played a pivotal role in the launch of NSE IX Receipts, which is trading in global stocks, and International Sustainability Exchange platform. His previous role was with Centrum, Avendis, Enam, and MCX. Over to you, Mr. Tejani.
Thank you so much, sir, for providing the opportunity today. As Arjun sir has mentioned about the global access in his previous session, that the GIFT City is providing investment opportunities for Indian retail investors to diversify their equity portfolio to global markets. As we have two models available, my friend Ritesh has already covered the global access part. Where I'm covering the other model, where we are offering NSE IX receipts, which are available for trading in global stocks, which is in the form of unsponsored depository receipts. I'll just give you a background, a little background, that how over the period the Indian investors are diversifying their equity portfolio. And since FY21, if you see the investment which has rise to around 3.5 times to 1. Which has already crossed $500 million investment into the foreign markets. So about NSE IFSC receipts, so this is a very innovative and a first of its kind model that the fractional shares are traded first time ever on the exchange platform under the regulatory
I believe there is a technical issue. Please bear with us while we get this sorted.
Yeah, hello.
Yeah,
Hi.
I believe there was a technical issue, so
Okay. No
would
worries.
request you to begin again, please.
Sure. So this is
Yeah, you
basically.
can move on to the next slide. You can move on to the next slide, please. Yeah, I think you were on the next slide. No,
Right.
I think the previous slide it was. Yeah.
Okay.
Yes.
Yeah. So
Yeah.
NSE Receipts is a very innovative and first of its kind model. We are bringing top 50 US stocks in unsponsored depository receipts. This entire framework is regulated under IFSCA regulatory sandbox. We have a partner, HDFC Bank, who is custodian and the issuer of unsponsored depository receipts, which is on the basis of underlying securities issued here in the IFSC. All the holders of depository receipts will receive a proportionate beneficial in underlying US shares. So whether it will be any corporate action, which is dividend, bonus, splits, so they will receive a proportionate benefit in that. And all the receipts which are traded on our platform account of hello.
Yeah.
I'll just. Yes.
Yeah.
My screen is visible, sir?
Yeah, it is.
Okay. So the our NSEIX receipts is under the we have brought into the form of unsponsored depository receipts, which is issued by HDFC Bank on the basis of the underlying securities listed in the US stock market. All the investors receive a proportionate beneficial in the underlying US securities, and the trading in depository receipts will be held in the demat account of investors in IFSC. The entire framework is governed by IFSC authority, and the investors' norms are protected under the IFSC regulation. NSEIX receipts also offer the fractional investment to the retail individual investors. So we brought the under unsponsored depository receipts in the predefined ratios. So we wanted to keep the price of each receipt between $1 to $20. So more and more small investor can participate into the NSEIX receipts. Apart from Indian retail investor under LRS of RBI, person residents outside India, eligible foreign entities, and non-Indian residents can participate in
Ujjwal?
Yes, Alok ji.
Yeah, I think we should now, move on to the next session, closing session. What do you say?
Sure. I think there's a
Because so apologize to Mr. Tejani because there is some technical difficulty.
Yeah, hi, sir.
Yeah, Mr. Tejani.
Yeah. So I'll just go through the detail of the.
Please. Yeah.
Yeah, sure. In terms of the structuring of NSCI receipts is like the every depository receipts is backed by the security listed on the overseas exchanges, which is deposited with the US custodian and held in the DTCJ in the US market. And the NSCI receipts custodian, which is HDFC Bank, holds a legal title to the underlying shares for and on behalf of the depository receipts holder in the IFSC market. So I just wanted to highlight that, how we are different in terms of the fractional investment in terms of other existing platform. As we all know that, the exchanges never offer trading in the fractional shares. So currently in the existing model, how the US registered broker dealers enable fractional transaction by transacting with the introducing brokers, and the broker dealer just merely pass the book entries based on the fractional order received from the introducing brokers and investors. So there are always, the investor left out with some of the concerns on the safety and the security, transparency, the ownership, where the actual holding will hold. Because in other platform, there are always, it will be held in some omnibus account of the foreign brokers account. Wherein trading in global stocks on NSCI's platform, this is the first time that the fractional shares are exclusively quoted and traded on our exchange platform, which is under the regulatory framework of IFSC authority. We are clearing part will carries out all the clearing and settlement and provide the settlement guarantee of all the trades. Investment which has been on the investor's name, and they will be held in the demat account of the investors. And investor protection fund will be available with the NSE International Exchange to protect the interest of the investors. So the fractional quantity investment on our platform is a safeguard and in the interest of the investor protection. And just to wind up on the key features that we have started unsponsored depository receipts in the top 50 US stocks, and based on the interest from the investors and the brokers, we will expand to different economies, as well as we wanted to include ETFs as well. So this trading is available for Indian residents under the LRS facility. All the order matching will happen in the IFSC only. None of the orders will be routed outside the exchange. The trading, clearing, settlement, and holding, everything will remain in the IFSC only. On the value proposition, this is the first time the fractional shares are traded on the exchange under the regulatory framework. The investors are protected under the IFSC regulation. Settlement guarantee will be provided by our clearing corporation, and the investors are entitled for corporate action benefits. So with this, I just wanted to end here, sir.
Yeah, couple of quick questions, sir, if you permit.
Yeah.
One is, investor, I believe, will have to open a separate demat account, or his current demat account can be used for...
No, sir. IFSC is a different jurisdiction. So investor has to open a trading account with the broker registered with NSE International Exchange. And with them, they have to open the separate demat account in IFSC. So we have
What about... Sorry, please go on.
Yeah, so we have here International Depository Services Limited, which can provide the demat custody services here.
Okay, and investor will also have to open a separate bank account?
It depends. If it is a choice of investor, they can transfer the money from their local bank account also, and they can do the trading in global stocks over here. So it is not mandatory to open an account over here in IFSC.
All right. I believe currently NSE Receipts is offering 50 US top 50 US stocks. Do you have any plan to include other companies from other countries as well?
Yeah. Our purpose is to include ETFs also, as well as the top performing economies and the global stocks from different geographies. That is also our plan, but that is based on the investors and the broker interest that how which stocks or which ETFs they wanted to include.
Fantastic. Thank you so much, Mr. Tejani, for your insights into NSE Receipts. It's a unique product where fractional ownership in the top 50 US companies can be done by Indian investors using the LRS route. And I think it's a unique product, a product that's different from other products that is being marketed. So I think investors would look forward to investing in this.
Thank you.
With this, friends, we come to the end of our session. And I have great pleasure in introducing the Vice Chairman of BSE's Brokers Forum, Mr. Anurag Bansal. Anurag is a rank holder and fellow member of Institute of Chartered Accountants of India and a member of Institute and Cost and Works Accountants of India. He possesses an extensive experience of over 25 years in the Indian capital markets. He's a whole-time director of SMC Global Securities, which along with its group companies offer a diverse range of financial services, including institutional and retail brokerage of equities, derivatives, commodities, currency, online trading, depository services, etc., etc., etc. With this, over to you, Anuragji.
Thanks, dear Alok, and good evening, ladies and gentlemen. As we bring the curtains down on the BBF World Investor Week India Investor Show 2023, on behalf of BBF, I want to begin by expressing my gratitude to the esteemed dignitaries who have graced us with their presence throughout this virtual event. First and foremost, I would like to extend our heartfelt appreciation to Shri GP Garg, Executive Director of Securities and Exchange Board of India, for being our distinguished guest of honor. Sir, your presence has added immense value to our discussions, and we are grateful for your insights and guidance. Our gratitude also goes out to Mr. Dipesh Shah, Executive Director of IFSCA, and Mr. Nilesh Shah, Group President and MD of Kotak Mahindra Asset Management. Your expertise and thoughtful perspectives have been instrumental in enriching our discussions. Your contributions have deepened our understanding of the financial landscape, and we are truly appreciative of your presence here at BBF India Investor Show. I would also like to acknowledge the pivotal role played by Securities and Exchange Board of India, SEBI, and International Financial Services Center Authority, IFSCA, in shaping the landscape of financial services in India. Thank you for your continued support and contributions to the growth of GIFT City. Your regulatory guidance and efforts have been instrumental in creating a conducive environment for investment and financial innovation within GIFT City. Further, I would like to extend heartfelt thanks to distinguished speakers, Mr. Sarath Satkumara and Mr. Saurabh Mukherjee. Your valuable contributions to this virtual event have been truly appreciated. Your insights and expertise have enriched our discussions, and we are grateful for your presence and knowledge you have shared. A special note of thanks to the resourceful speakers from Team IFSCA, NSE IX, and India INX. Your contributions have been important and invaluable in providing a holistic view of the investment opportunities presented by GIFT City. Friends, this is the first time that we discuss about inbound investments, outbound investments, and local investments, all three aspects of investments together during India Investors Show, and we will endeavor to bring more such sessions to our audience in time to come. Before we conclude this memorable event, I would like to take a moment to extend my warmest congratulations to someone who has played a pivotal role in making this virtual gathering a resounding success. And I am referring to our Master of Ceremony, Alok Churiwala. Alok, your enthusiasm and ability to keep our proceedings engaged have been invaluable. Thank you for dedicating your time to lead us through this event. And I would also like to express my sincere appreciation to entire team of BSE Brokers Forum for their tireless efforts in curating this informative and impactful virtual event. My sincere gratitude also goes out to teams at NSE IX and India INX for their support and active participation in this virtual event. Your commitment to furthering the cause of international investment has been truly commendable. And lastly, a big thanks to our audience today for your patient listening. And I hope you carry forward the wealth of knowledge and insights gained during today's discussions into your investment journeys. Thank you so much.
Thank you. Thank you very much.